Welcome back to the European Market Open. A minute to go until the start of cash equities trading for this Tuesday morning. Here are your headlines. Fears over growth. Stocks in Asia follow Wall Street lower after the S&P 500's worst rout since May, but US and European futures point higher. A big beat at UBS. The Swiss lender sees a surge in its wealth management and investment banking units in the second quarter. Plus, do not travel. The US CDC raises its virus alert level for the UK, telling visitors to stay away. The latest blow to England's reopening. Good morning, everybody. Let's have a look at the futures then. So, as we've said many times, big sell-off yesterday, more than 2% down on big European equity markets, expecting a little bit of a bounce this morning. In fact, that futures picture has been improving as we've been going through the morning. Yesterday, we saw heavy selling of cyclicals, industrials, energy stocks. Anything that was really pegged to the reopening trade was under pressure in yesterday's session. Today could look a little bit different, or at least we could see those same sectors on the move, but to the upside. Let's focus in on the start of the European trading session then and see how high we can go here. The FTSE 100 then, the first out of the gates, up by 0.2% at this early stage of the trading day. We are, of course, factoring in a lot of earnings here as well. So that is also something we shouldn't lose sight of, despite the big picture concerns around the Delta virus, the Delta variant of the coronavirus, clearly dominating market thinking earlier on this week. The IBEX over in Spain up by 0.4%. The CAC 40 in Paris up by 0.5%. And we wait for the DAX and the FTSE MIB to open up. But we do see these markets looking much more buoyant today, but not clawing back all of the losses, of course, of yesterday. So we've got European equity markets then opening on the front foot. That's after virus concerns spurred a global equities sell-off in yesterday's session, with cyclicals among the weakest performers. The S&P 500 had its worst day since May yesterday, but futures are now edging higher. Let's get into this conversation with Miles Bradshaw, JP Morgan Asset Management Head of Global Aggregate Fixed Income Strategies. He joins us now. Miles, great to speak to you. Perfect voice to have on today, given what we've seen in bond markets. 1.2% yield on the US 10-year. Can you explain that?
Yeah, I think it's a battle between the fundamentals and the technicals. I mean, the fundamentals, we all know the economy is strong, the economy is recovering, inflation is high. So why are bond yields falling? It seems bizarre, doesn't it? And the bond yields are falling, I think, critically because of a lot of positioning issues. And it was the June FOMC where the Fed basically reacted to higher inflation and signaled that they will be moving interest rates if inflation moves out of control, that gave investors more confidence that long-term bond yields would be stable. Prior to that, there was a lot of positioning, short positioning in the long bond sector, and therefore you've had short covering. You've also had increased buying from liability-driven investors that has meant that there's been no marginal seller out there in the long end. So I think the technicals are extremely positive. There's a demand for a safe asset as equities move higher, and that has definitely been beating fundamentals of late. And the elastic band in between, as it were, is the valuations. And they're now becoming quite stretched. If you look at 10-year real yields, they're back at their secular lows. So that's the bit in between that ultimately fundamentals you would expect to drive bond yields over the longer term. And the valuations are now becoming the bit that's looking very, very stretched indeed.
And so, Miles, when you think about clues that you can take from the bond market when you're considering risk assets. You don't buy into this argument then that the bond market has been flagging for some time the nervousness around the Delta variant that caught up with equities yesterday. You don't get the sense that maybe we were seeing these warning signs in treasury markets and equity traders should have been paying attention, because you actually think it was more to do with technicals.
I do, and I think the sign you're talking about is really the flattening of the yield curve, which clearly usually signals the end of an economic cycle. But there are other signs in the bond market that aren't signaling such distress. For example, the fact that the market is still pricing quite a normalization of Fed funds rates, interest rates, short-term interest rates, and that hasn't been moving as much as long-dated bond yields have. If you look at things like credit spreads, default expectations remain very low. So there's lots of other signs in the bond market that are sort of saying the outlook for economic growth is firm. And the main change is obviously long bond yields, the flattening of long-term interest rates relative to short-term interest rates, which technical forces, I think, have been a big factor.
And tell me more about record real yields. We're near record real yields, aren't we? And what does that tell us? What does that tell you about your investment universe, Miles?
Yeah, I mean, if you think about it from an academic perspective, long-term real yields would tell you the market's expectation of long-term growth is coming down. And obviously that's been a phenomenon we've been witnessing over the last 20 years, and it's got a lot to do about long-term productivity. But also what it reflects is what the demand and supply are for long-dated assets. And I think that's perhaps more interesting in the sense that you've still got very strong buying from all global central banks. We'll see from the ECB this week, but we expect ECB asset purchases to continue for quite some time after the Fed starts tapering. You've also got very strong demand from retail investors, as we have an aging society and people need to put their assets to work to get an income. So there's also an element that long-term neutral interest rates are falling because there is increasing demand for long-term stable assets such as bonds that give you an income for your pension.
So, Miles, if this has been very much about technicals and not about concerns around global growth and the Delta variant, what changes next? What happens next in bond markets, in treasury markets? What's the next leg of the story?
Yeah, I mean, I don't want to dismiss the fundamentals because we have had a lot of economic momentum, but I think it's about more than fundamentals in terms of what's happening. So what happens next? Well, obviously we've got data, and the key one really is the outlook for US employment. So I think the August payrolls is absolutely key in terms of setting the stage and perhaps solidifying confidence about the economic expansion or not. And then we have Jackson Hole and the role of the central banks. But ultimately, whenever you have strong buying, it's very difficult to pick the bottom about what stops that buying. And really, it's really watching that price action and managing your risk such that you're able to hold the position for a longer period of time. But it's the data that will give confidence that the economy is continuing to expand, that the unemployment rate is coming down, and to allay some of these fears. The Delta variant is obviously another near-term fear that people are worried about, and clearly everyone's watching the hospitalization rate in the UK. And if that remains low, it gives confidence that the case count can rise in other places like the US without necessarily leading to second lockdowns. So I think those three things, the data, the case count, and in terms of the buying program, the price action, as that begins to diminish, those are the three things that I think determine the direction of bond yields over the course of the next month.
Miles, thanks very much. Stay with us. Miles Bradshaw, JP Morgan Asset Management, Head of Global Aggregate Fixed Income Strategies. He stays with us on the programme. Coming up right here on the European Market Open then, more from our conversation with the UBS CEO, Ralph Harmers. We get his thoughts on earnings, on momentum and work from home and crypto. More from our interview. Manus Cranny talks to Ralph Harmers next. This is Bloomberg.
To the top about the mission as you see the evolution of fintech enabling what you call democratization. Do you think finance is becoming democratized, truly democratized at the moment. The fact that we're still having discussion about whether you can get in on IPOs, for example, are you feeling that the opportunities are there for anyone to be able to start to make their way within the financial world?
Look, there's always going to be progress to be made, but I think, you know, there are many brands now helping the unbanked and the underbanked, right? I think we've seen a lot of success in where, you know, digital disruption can really help with some of those groups. You know, that's not really our target audience. We do want to offer great advice to everyone, but I think that there are a lot of other folks going after that marketplace. But there's always more progress. You know, there's always more progress we can make. And sure, you're right. You know, in places like private investing, and you know, there are still sort of pockets of the market where, you know, you have to be in the know.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
Welcome back to the European Market Open. Just coming up to 10 minutes into our European trading session, we are seeing a fairly substantial bounce, actually, for European equity markets. The CAC 40's up by just over 1%, as you see on your screens there. The FTSE MIB, which was down more than 3% yesterday, rallying by 0.9% this morning. Let's take a look at some of the individual movers. We're thinking about the global picture, the concerns around the Delta variant, which hit the market so hard yesterday. But we're also crucially thinking about individual earnings stories, and it's the latter that seems to be cutting through today. So this is the share price of Volvo, down by 2.95%, so nearly 3% to the downside. Numbers coming in below estimates. They also see further disruption to their supply chain, and the supply chain is described as unstable over at Jefferies. So the truck maker Volvo under pressure as a result there. Also concern around the supply challenges at Electrolux. So this, the maker of white goods, household goods, they're also cautious on their supply chain challenges for the period to come. And the operating profit looking back to the second quarter also missing estimates. And so as a result, the stock down by 7.4%. And just in case you thought it was all to the downside, it isn't. We've had some companies impressing with their numbers today. And one of those is UBS, strong on wealth management, strong in investment banking, really interesting set of numbers coming through from this business, really resilient set of numbers coming through from the business, according to many, but also an interesting wide-ranging conversation to bring you around other assets with the CEO. And with that in mind, UBS posted better than expected then second quarter profit and added $25 billion in new wealth management assets during the period. Manus Cranny spoke with the UBS CEO, Ralph Harmers, for that wide-ranging conversation that I described. He started by asking him about the numbers.
We had a really good set of numbers this quarter, and there's a couple of things here. So on the income side, we grew income by 21%. The cost increased by 10%. The profit before tax came out at $2.6 billion, which is a record quarter result. And it's really on the back of strong commercial momentum. So clearly the markets are positive, but beyond the markets, the way we deal with our clients, I talk to clients all the time, they need the advice. They're coming out of COVID, they are coming out of lockdown. They want to know, do I have to digitalize more? How do I build my scale? Do I have too much delay on my investments? Do I need to acquire a company? And it's all of that activity that you see both in the markets as well as in our banking activity, in our banking operations.
And certainly on the M&A side in the investment bank, I think it's your best quarter ever. What is the pipeline like? Where are you strongest in terms of mandate winning on the M&A business?
It's literally across the board. Over the last 6 to 8 quarters, we've truly focused on a couple of sectors that we wanted to be our sectors, the TMT sector, the industry sector. And what you see coming through is that focus, and I've been pitching myself in a couple of cases as well, and that real care for the clients and helping them to find the right candidates to acquire or to find the right way to issue capital. It is that what's paying off right now. And we're actually gaining market share across the board, specifically also in the EMEA region.
Is there pent-up desire to do deals?
Yes, there is a real desire to do deals, but there's also a necessity to do deals because I think that most companies have been standing still, and we had to stand still in the pandemic. And when you come out of the pandemic, you make your new analysis, like we did it as well, like I did it as well in the first quarter. And all the CEOs are now looking at, okay, guys, where is this world going? And where do I take this company? And then it's always a combination of organic improvement opportunities and inorganic opportunities as well. And that's where you see a lot of the demand coming from at this moment.
On the lending side within the wealth management business, you look at the first quarter globally to the second quarter, there seems to be a slight slowdown. Where are you lending the most amount of money to, and did it slow down?
I wouldn't say it slowed down. We still had net new loans of 8 billion this quarter versus 11 billion last quarter, which is annualized still mid-teens.
Okay.
Yeah, so it's really growing fast. We are growing fast in loans in the US, where we are in our wealth business under-penetrated in comparison to our peers, and we see an opportunity there to support our clients. So that's where we see quite some growth in lending. But also here in Switzerland, you see the confidence back in with the people buying houses and the mortgage portfolio growing as well. So it's a mix.
That was the UBS CEO, Ralph Harmer, speaking there to Manus Cranny. And Manus and Ralph Harmer spoke also about the yield environment in the United States, about what it means that we see such low yields. Let's get back to our conversation with Miles Bradshaw, JP Morgan Asset Management Head of Global Aggregate Fixed Income Strategies, who's still with us. Miles, elsewhere in the conversation, they did talk about that, about what the low yielding environment means and how far it goes. We talked about some of this already, but let me carry on with you on that subject. I mean, a lot of people thinking about whether we're going to see 1% yields again on US 10 years. We're at 1.2 right now, so I mean, it's not all that far away. Is that something that's on your radar?
I mean, it's more than possible because of the technical forces and the strong buying we've seen, but I think it's useful to take a step back. You know, we had 1% yields in January. Back then, we had not yet had the Georgia State Senate runoff. We didn't know if there was going to be unified government. Since then, we've had, almost $2 trillion of fiscal stimulus and more to come. Back then, we hadn't even started the vaccine rollout. We didn't know how successful it would be. Now we've had half the population vaccinated. Back then, we had 0 Fed dots or the median dot for 2023 from the Fed was 0 hikes. Now we have 2. And lastly, back then, we had a forecast for inflation going to about 3% for core CPI. Now we're more at 4.5%. So I think fundamentally, the economy is in a much better shape. Separate question is whether earnings expectations for equity markets have got too far ahead of themselves and whether there may be some marginal disappointment. But I think it's important to differentiate the noise from the signal. And the signal is that the economy is at an early stage of economic expansion.
Okay, so from what you've said there, that long list, really helpful, Miles, reminding us what's different to January. So it doesn't make sense then for yields to go as low as 1% then perhaps?
That's, I think, where you want to be fading the move, yes. I think that's where the valuations become even more stretched. And, the difficulty is knowing how long we can be at that 1% level for. But I think from a macro perspective, early stages of economic expansion, strong growth ahead, easy financial conditions, even with the pullback in equities and the widening in spreads we saw yesterday. Global financial conditions are very easy, and there's still lots of pent-up demand and very strong balance sheets.
Let me ask you then, Miles, about those global conditions or focusing in on a different part of the globe, if you like, and that's the UK. The conversation had been very much more hawkish over the last week or so. We'd had a couple of voices at the Bank of England sounding more hawkish. Then we heard from Catherine Mann yesterday. She was saying that the bank shouldn't tighten too prematurely or too quickly. What's your view on where we go next on gilts?
So I think with the Bank of England, the debate they're having is the timing of the exit, and people like Michael Saunders are putting the case that there's a lot of second-tier data that suggests the economy is very strong. But most likely for the consensus and the majority, it's a case of waiting for official confirmation because the cost of delaying it for a few months seems relatively low. So my sense is that in August, probably the bank will stay put on all its various tools in the August inflation report. And it really wants to see the data after the September furlough rolls off, which is probably more likely next year. But really the November report is when November, or inflation report that is probably the date in which you probably start to have most discussions about what's going to be happening in terms of the tightening. And I think my view is probably, given the breadth of data that show the strength of the labour market, that we're probably looking at the Bank of England raising rates in 2022.
Miles, thanks very much. Miles Bradshaw, JP Morgan Asset Management, Head of Global Aggregate Fixed Income Strategies. Thanks very much for joining us this morning. Coming up on the programme, do not travel. The US raises its travel alert levels for the UK amid a virus surge and the lifting of restrictions. We'll discuss the risks to the UK and Europe next. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem para os amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Market Open. 21 minutes into our European trading session, looking very different to yesterday, looking opposite to yesterday, but we haven't clawed back all of the losses, of course, of yesterday. We were down by more than 2% on many of these markets. We bounced a little this morning, bounced quite substantially, in fact, on the FTSE, the DAX, and on the CAC, up by more than 1% this morning. Now, the US has raised its travel alert for the UK because of the ongoing surge in cases. The State Department issued a do not travel statement after the CDC boosted its alert to very high. They said even fully vaccinated travellers are at risk of contracting and spreading variants. Joining us for more is our executive.
Good morning, traders. We're planning to trade euro today, and I'm looking to sell short euro against United States dollar. I'm looking to sell at 117.840 7. Please be quick because any minute, any second, this will get filled. So if you're looking to sell short, if you're looking to trade euro against United States dollar, here's your chance. You can place an order, and we're not yet filled with order, so we will see if we'll be able to fill right now. Okay, we're still waiting, and position opened on euro at 117.847. You still have chance because for some brokers might give you a higher price to sell. Some brokers might give you another price. Okay, it's all about OTC, over-counter trading. If you trade in, most of you guys trade in as well, over-counter OTC, open positions through OTC. So you probably know the idea how it works. If you don't know, please Google. You can Google and you can find out what's the difference between OTC and level 2 direct access to exchange. Okay, as you can see, we moved lower. So maybe I'll be able right now to, yes, I'm going to place a stop on profit for euro at 117.82.7. As you can see, just right here. Okay, good guys, all of you guys who managed to trade and place an order, we're already in profit. I'll speak to you later.
Months from now. Yeah, absolutely. EasyJet saying this morning there isn't transparency on the way that these rules are made, certainly singling out the UK on that front. Ros, thanks very much for joining us. Good to speak to you. Rosalind Matheson there with the latest on the sort of political dimensions to that travel story. Let's get a Bloomberg Business Flash, the top corporate stories we're covering this morning. Here's Laura.
Thanks, Anna. EasyJet has reported a headline pre-tax loss for the third quarter of just over £318 million, better than analysts had forecast. The airline says demand in its UK home market remains depressed, pushing it to transfer more capacity to mainland Europe as it looks to salvage late summer bookings. ExxonMobil had recruited a company outsider for the first time to join its inner circle of managers just weeks after it suffered a stunning setback at the hands of a tiny activist investor. Catherine Mills will join the oil giant as CFO next month from Diageo. She'll be the first woman among the ranks of Exxon's senior vice presidents. Bloomberg has learned that Apple is pushing back its return to office deadline by at least a month to October at the earliest. The company is responding to a resurgence of COVID variants across many countries. Apple will give its employees at least a month's warning before mandating a return to offices. IBM had reported its biggest sales increase in 3 years, beating estimates on the back of strong demand for cloud computing. Revenue rose 3% to almost $19 billion in the second quarter, signaling that CEO Arvind Krishna's pivot to cloud is starting to pay off. That's the Bloomberg Business Flash. Anna.
Laura, thank you very much. Laura writes here in London. Just getting some breaking news coming through with regards to Singapore. Singapore imposing restrictions again as the Delta variant spreads. So for those focused on the spread of the Delta variant, and let's face it, that was the dominant conversation, at least around markets yesterday. Singapore stopping dining in, cutting social gatherings to just 2 people. They will return to their attempt to have a rules-based system based on vaccination status at a later date. This comes as Singapore had been trying to pivot towards a different type of policy, living with the virus to some extent. They're backtracking again, though, now. Let's just tell you what is coming up a little bit on the programme today, or on our day book. We've got the UK's Kwasi Kwarteng. He's going to be appearing at a hearing at 11:45 UK time. 2 p.m. today, Blue Origin takes off. That'll be something in focus after we saw Richard Branson, of course, getting very, paving the way, if you like, with his space flight. And then 4 p.m. at UK time, Buttigieg speaks over in the United States. We get Netflix earnings after the close. Still to come on this programme. Coming up next on this programme, we're going to be talking about the banking sector once again. A big beat over at UBS. The Swiss lender sees a surge in its wealth management business in the second quarter. We'll have more from our conversation with the UBS CEO, Ralph Harmers, in conversation with Manus Cranny. More from that interview next. This is Bloomberg.
Okay, guys, we need to move our stop for euro. I'm going to place at 117.79.7. It will give us £500 in profit, just right here. Okay, to place stop. So anything will happen, you know that you will not lose any money at all. Okay, stay safe.
Welcome back to the European Market Open this Tuesday morning, half an hour into a session that looks, from this angle at least, the opposite of what we saw yesterday. Yesterday was dominated by heavy selling across European equity markets. We were down by more than 2%, remember, on many of them, down by more than 3% on some. Today looks different. Today we had green across the map. We have green across this screen. You can see that we're up by more than 1% on many of the major markets in Europe. Let's have a look at the sector breakdown, and there's nothing in negative territory from a sector perspective. Technology is the least best performing, if you like, but even that is up by 0.25%. Basic resources up by 1.7%. Insurance, financial services, construction and materials to the upside. So cyclicals, industrials, energy, all moving higher today in a sort of an opposite trade to yesterday. Let's get back to the earnings story because, of course, we're tracking the Delta variant, but the earnings season is very much upon us as well. Shares in UBS are rising after profit beat estimates in a strong quarter for wealth management for the bank. Manus Cranny has been speaking to the CEO, Ralph Hammers, in Zurich.
There is a real desire to do deals, but there is also a necessity to do deals because I think that most companies have been standing still, and we had to stand still in the pandemic. And when you come out of the pandemic, you make your new analysis, like we did it as well, like I did it as well in the first quarter. And all the CEOs are now looking at, okay, guys, where is this world going, and where do I take this company? And then it's always a combination of organic improvement opportunities and inorganic opportunities as well. And that's where you see a lot of the demand coming from at this moment.
On the lending side within the wealth management business, you look at the first quarter globally to the second quarter, there seems to be a slight slowdown. Where are you lending the most amount of money to, and did it slow down?
I wouldn't say it slowed down. We still had the net new loans of 8 billion this quarter versus 11 billion last quarter, which is annualized still a mid-teens.
Okay.
Yeah, so it's really growing fast. We are growing fast in loans in the US, where we are in our wealth business under-penetrated in comparison to our peers, and we see an opportunity there to support our clients. So that's where we see quite some growth in lending. But also here in Switzerland, you see the confidence back in with the people buying houses and the mortgage portfolio growing as well. So it's a mix.
The stock needs to get back to a higher price. Your mission, I presume, is to deliver growth. Where is that growth going to come from? You've often said to me, look, I'm going to lend more in America, I want to double down. Where is the growth as you look at the business in 9 months? Where do you go to next?
Yeah, so that is very clear. So there's a combination of further scalability, efficiency, as well as doubling down on those areas where we expect most of the growth to come from. So we will focus on the US for growth, and we will focus on Asia Pacific for growth. Plans are being developed, but at this moment you already see that our loan growth is predominantly in the US. The SMA in-stream, the funds flow coming into the bank is in the US and in Asia. So basically those two regions are growing fast, and we're doubling down on those.
The American banks are preparing for crypto exposure, whether it's funds to their wealth management clients, whatever. What are you doing in crypto? What are you going to do for the wealth management clients in crypto?
It's a very good question, Manus, and because clients are looking at different alternatives, and they hear about crypto, and there is a bit of a fear of missing out as well. They read it in the papers, but they also see the volatility. So honestly, we advise with caution. We don't offer it actively, so we advise with caution. We feel that crypto itself is still a an untested asset category. And so if you want to speculate...
You've no FOMO as a CEO that maybe you're going to miss out a few millionaires and billionaires?
I never have FOMO. So, because I'm determined as to what I want to do. And it's also about focus. And there is always these things that you hear about, that maybe this or maybe that. But I've really learned in my 8 years now as CEO of almost 1 here and 7 with ING, that what is important is, guys, this is the story, this is what we're known for, this is what we do for our clients, and that's what we have to continue.
Let's finish off with work from home. It's a work in progress, so to speak. We understand 2/3 will be offered a mixed, a hybrid solution. What does that really mean for the investment bank? What percentage at all of the investment bank can really work from home?
Oh, I think also at least 2/3, honestly. So what you see is a hybrid way of working is here to stay. It was accelerated because of the pandemic. It was already coming in, right? It was coming into all of the industries, but it's here to stay.
But could you see traders? Could you see traders and salespeople?
No, but that is, so the traders are clearly part of the 25% to 1/3 of the roles for which it is really difficult to have them work from home. But beyond that, there is 2/3 to 75% of our roles that can be performed in the mix of working from home and working in the office. Our clients like it. Our clients have also experienced that they don't want to always come to the office in order to meet our people. They don't mind online advice, so now and then as well. So it's both on the client side as well as for our staff. It's a new way of working. It is here to stay. And I think it's also better in the end for work-life balance.
The UBS CEO, Ralph Harmer, speaking there to Manus Granny. Don't worry about FOMO. Stay focused. Let's get a Bloomberg First Web News update. Here's Laura.
Thanks, Anna. America's COVID-19-induced recession ended in April 2020 after just 2 months, making it the nation's shortest downturn on record. That's the finding of a panel of the National Bureau of Economic Research that serves as an arbiter of U.S. expansion dates. 22 million jobs were lost last spring as the country was hit by the pandemic. The UK government has published a plan to overhaul the nation's power markets to prepare for net zero. Authorities say the plan would save £10 billion a year by the middle of the century. One of the cornerstone reforms could be an independent body to run the electricity network. The government also will look at electric vehicle charging and large-scale power storage. A man who carried a Trump 2020 flag onto the Senate floor has been sentenced to 8 months behind bars, the first jail term from the January riot at the U.S. Capitol. The court's judge said he'd taken into account that Paul Hodgkins had no previous criminal record and didn't engage in violence. The sentence was less than the 18 months the government had requested. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright here in London. Coming up on this programme, the space race continues. Billionaire Jeff Bezos is set to launch into the stratosphere in the coming hours. We've got that story next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is the first operational and commercial flight of New Shepard. We followed a methodical step-by-step approach to get to this point in time. We're ready, and we can't wait for Tuesday.
That was the Blue Origin CEO, Bob Smith, speaking ahead of the company's first manned rocket launch. Founder Jeff Bezos is only a few hours away from blasting himself into space. Bloomberg's Ed Ludlow has been at the launch site in Van Horn in Texas.
If all goes to plan, New Shepard will generate 110,000 pounds of thrust, propelling Jeff Bezos, Mark Bezos, Wally Funk, and Oliver Damon up towards the Kármán line, 62 miles above Earth. As they approach, the New Shepard booster will separate from the capsule. The capsule will carry on beyond the Kármán line to about 66 miles above Earth. It's not far enough to escape Earth's gravitational pull. So the capsule, after a few minutes of weightlessness for the astronauts, will start falling back down to Earth, using its own air resistance, the flat bottom of the capsule, to slow itself down. There will be some drag chutes that are then fired. And as it nears the Earth, 3 large parachutes will deploy with a sudden burst of air from the air thruster just before the capsule hits the ground. As of Monday evening, all astronauts had completed their brief 2-day training. But as always with any launch, weather, especially here in West Texas in the summer, is a factor. For Blue Origin, it is a substantive step forward in what has been slow progress. Jeff Bezos founded the company in 2000. He acquired the land here in West Texas for the Blue Origin site in 2005. The launch pad for New Shepard was not built until 2014. And in that time, what's happened is SpaceX has really leapfrogged Blue Origin in terms of technology. It's really won most of the commercial contracts from NASA and other private sector partners. And Blue Origin wants to catch up. Providing paying customers just a few minutes of weightlessness was the original goal for the company, but now it's just the tip of the iceberg in terms of the ambition that Blue Origin has. It wants to compete with SpaceX and other private sector carriers for those satellite contracts, for the lunar lander contracts for 2024, which SpaceX was awarded and Blue Origin has appealed. It also builds engines for other companies like ULA. And then Bezos has this grand vision of the future where the human race is a spacefaring race and we can look to the galaxy for natural resources. But first things first, an 11-minute flight up to the Kármán line for just a few moments or minutes of weightlessness before buckling back and falling down, experiencing forces of 5 times the Earth's gravity on the way down. Ed Ludlow, Bloomberg News, Van Horn, Texas.
And do not miss our special coverage then of the Blue Origin launch. That starts at 1:30 p.m. London time, 8:30 a.m. on the US East Coast. Back on Earth, let's get a Bloomberg Business Flash. Here's Laura.
I know what I would do for 6 minutes of weightlessness. But in business news, UBS has posted better than expected profits and an additional $25 billion of new fee-generating assets in its wealth management unit during the second quarter. Net income of $2 billion beat analyst estimates, but the Swiss bank warned that client activity is set to slow down going forward. CEO Ralph Hamers told Bloomberg TV he's targeting growth by doubling down on the US and Asia-Pacific regions. EasyJet has reported a headline pre-tax loss for the third quarter of just over £318 million, better than analysts had forecast. The airline says demand in its UK home market remains depressed, pushing it to transfer more capacity to mainland Europe as it looks to salvage late summer bookings. IBM has reported its biggest sales increase in 3 years, beating estimates on the back of strong demand for cloud computing. Revenue rose 3% to almost $19 billion in the second quarter, signaling that CEO Arvind Krishna's pivot to the cloud is starting to pay off. That's the Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura writes here in London. Now, vaccine certificates are set to be required to enter nightclubs and other large crowded venues in England, this sparking warnings from hospitality businesses that the plan will put thousands of jobs at risk. Some people clearly celebrating the ability to go clubbing again. British Prime Minister Boris Johnson appealed to millions of young people to come forward for their COVID shots.
By the end of September, when all over 18s will have had their chance to be double jabbed, we're planning to make full vaccination the condition of entry to nightclubs and other venues where large crowds gather. Proof of a negative test will no longer be enough.
Joe Mays from our UK government team joins us. So we heard there, good morning to you, Joe. We heard there the Prime Minister setting out the arguments why you need to do this for nightclubs. I suppose this gets me thinking whether this is going to be the thin end of the wedge. We've seen in France, they want to use COVID passes to enter other places, restaurants, cafes, but there doesn't seem to be all that much enthusiasm for using COVID passes more widely than was set out yesterday here in the UK. And I'm thinking across the political spectrum, not just from the Conservative Party.
Yes, you're right.
Okay, guys, as you can see, position closed on euro. We made 5 pips in about, what, 15 minutes? Well done, all of you guys who managed to wake up early in the morning and follow us. Well done, you made your first profit. Okay, let's move on. I'll speak to you later. Stay safe.
Nightclubs should be opening in the first place because they can become these super spreader locations, as we see in the Netherlands, where they had to backtrack on opening up of nightclubs. So Boris Johnson's really caused a very difficult position on this issue, and we'll have to see how the controversy plays out.
We saw the Prime Minister there giving his briefing, actually doing it from his own self-isolation because he's been pinged, as it's called in the UK, contacted by Track and Trace and told that he needs to self-isolate after contact, of course, with his own health secretary. All in all, not necessarily the reopening story, the Freedom Day, as it was dubbed by various newspapers yesterday in England, that had been maybe hoped for by many members of the UK government.
No, exactly. And if anything, it's been somewhat chaotic, such that, critical parts of the economy coming under pressure because they don't have enough workers, because they have had to self-isolate because of that ping element you talked about. We've seen train lines, supplies to shops, all being disrupted by people having to self-isolate. And again, so the Prime Minister yesterday was talking about creating some exemptions for people who work in those critical sectors. And we have a story today about the shortage of lorry drivers in the UK, which has been exacerbated by the effects of Brexit and the pandemic. That's also being affected by the so-called ping-demic. So yes, it's definitely not the Freedom Day that Boris Johnson would have hoped for.
Yeah, take us further into that that sort of ping-demic story, Joe, because you've done, as you say, this sort of deep dive into the logistics sector and how that is handling this. But this goes beyond. We've heard about supermarkets, about pubs, about various companies that have had to shut down parts of their operations because they cannot get enough staff, forcing the government to allow critical staff members to come to work, even if they have had contact with COVID cases. But tell us, what did your deep dive into trucking reveal?
Well, this is just an area of the economy where problems are particularly acute because of multiple factors coming to a head. We have the effect of Brexit, which meant that many EU nationals who were truckers in the UK returning to Europe. You have the effects of the pandemic, people isolating. You have various tax changes in UK law, which meant many people don't want to be drivers anymore. All that's combined to make it just very, very difficult for companies, businesses to get their goods onto the shelves of supermarkets, for example. We have a statement from Sainsbury's in our story saying that they're trying their best to keep shelves stocked, but it's becoming increasingly difficult. And as the economy's been reopening because of the easing of restrictions, that's added further pressure on the demand side. So all of this together means that it's a particularly problematic time for shops, and the government's trying to do things like relaxing the hours that drivers can drive, but this is not enough according to the industry, and the problem's only going to get worse, and they want things like a temporary visa to allow more EU drivers back into the UK, which the government is resisting. There's a real battle, and people are seeing it in shops, so it's something that the government wants to try and address quite urgently.
Joe, thanks very much. Joe Mays from our UK government team, and with no sign of a change in rules broadly around that pandemic until I think it's the 16th of August. We'll see where that story develops to next. Coming up here on this programme, hope is returning then to stocks after Monday's bout of fear. We were certainly gripped by concerns around that Delta variant yesterday. We'll be back to our markets conversation next. We're seeing a bit of a bounce, though, in today's session, as you see to the right of your screen there. This is Bloomberg.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. 52 minutes into Tuesday's session. European equity markets looking different to yesterday. Yesterday was all about the selling. Today seems to be about a bit of a rebound. Laura Cooper, Bloomberg's Markets Live macro strategist, is with us here in London. Laura, good to speak to you then. Today we are seeing a different session to yesterday. Talk us through the price action that was and that we see in front of us today.
Well, it does look to be a case of a classic turnaround Tuesday because we are seeing a reversal of those sell-off trades that we saw yesterday. So, for example, banks and energy are rebounding after leading those losses yesterday. That's in part due to commodity prices recovering. We also have solid earnings coming from banks like UBS, and then travel and leisure. That's on the front foot as well, despite the fact that we are seeing that U.S. raise the travel alert for the U.K. So I think really this raises the question of how much pessimism was priced in yesterday. So I do think that the growth hopes are still going to conquer that fear.
Right, that's interesting because, the question of the day you've been asking on the Markets Live blog has been to do with that Delta variant. How far can the Delta variant drive down risk assets, and whether we're done with that in the short term or whether we return to that theme later on in the day, I guess still remains to be seen.
Well, and there are contrasting views around that, and that's really the key question is, does this spread of the Delta variant, will that actually thwart these growth recoveries? So if we look, for example, JP Morgan strategists actually see this as a buying opportunity. They do expect this reopening trade is not fully priced in. We are going to see that rotation recover once again, whereas on the bearish end of the spectrum, for example, Bloomberg Intelligence came out with a note that basically sees this as small caps having further room to the the downside. Large caps are not yet oversold in the U.S., so that does point to more of a drawdown. And they see this as more of a 2011 corollary, where we saw inflation expectations surge, and that prompted a sharp correction in the S&P 500 by about 15% over 6 months. So they're leaning more towards that camp. So I think at this stage it's really unclear what direction markets are going to take, because we do have this conflicting opinions about the broader economic backdrop.
Right, and thinking about those concerns around inflation, that's certainly dominated a lot of our thinking in the first half of this year, Laura, and perhaps still does. What about the UK side of this? The Bank of England, the most recent commentary was pretty hawkish until yesterday, and then we heard from Catherine Mann, and she was urging people not to, or suggesting that the central bank at least shouldn't tighten prematurely. Where does that leave us?
Well, it's been a really interesting kind of couple of weeks in the UK. Certainly we did have those hawkish comments from the Bank of England around the potential for that pullback of stimulus to happen sooner than expected. That came after a very strong inflation print, whereas this week we're starting to see those doves come out of the MPC. And that's really because they see the recovery as still fragile, and we could potentially see consumers change their behavior if this virus risks reemerge with these restricted lockdowns being lifted. So we are seeing money markets price in about 5 basis points of rate hikes by year end, about a full hike over the coming year. So it's likely that we could see that potentially pare back a bit, and that could feed through more broadly to further currency weakness as well.
Okay, briefly though, Laura, there are earnings stories to focus on as well.
Oh, absolutely. And I certainly think the fact that we had UBS this morning provide that stronger than expected profit forecast does set up for quite a high bar for the rest of the earnings season. I do think that banks are going to be looking in Europe for more of a rebound after certainly yesterday's sell-off. But again, we do have the ECB potentially coming out on Thursday being a little bit more cautious. We do have them potentially capping that dividend payout later this year. So ultimately, I think there are still headwinds ahead.
Laura, thanks so much. Laura Cooper, Bloomberg Markets Live macro strategist with us this morning on the program. Yeah, the UBS share price up 4.4%. That takes them back to, where we were last week, or certainly earlier on this month. But certainly we are seeing some quite substantial share price reaction to earnings stories, looking at UBS, looking at Electrolux and others this morning. So the earnings season is part of the story today. The Delta variant. We'll continue to track that as well, of course. Surveillance is next. This is Bloomberg.
Happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we are trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You should never invest in something that can't be simplistically explained to you. The very, very good investment advisors can take complex matters and make them very simple.
We're planning to make full vaccination the condition of entry to nightclubs and other venues where large crowds gather.
I think the reality is for international travel, COVID passports are inevitable in relation to who's had the vaccine, how many doses, checking it.
We are practically pleading with people to please, if you're not vaccinated yet, seriously consider getting vaccinated.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 20th of July. I'm Francine Lacqua here in London, and here's what's coming up on today's program. A big beat for UBS. The Swiss lender sees a surge in its wealth management and investment banking units in the second quarter. Stocks rebound after a brutal Monday as investors reassess the prospects for growth, while Bitcoin slips below the closely watched $30,000 level. And the U.S. raises its UK travel alert to the highest level, throwing doubt over its plans to reopen air routes. Singapore stops inside dining. So, good morning. A lot going on as these growth concerns have suddenly taken hold of the markets as investors now worry about this potential spread of the Delta variant. Treasury yields have fallen to their lowest since February, with a 1% mark now likely in sight for some traders. David Costin from Goldman Sachs says there's a specific type of company likely to do well in a decelerating growth environment.
A lot of the glamour stocks, many of whom are losing money now, but growing their revenues super fast. Now, I think those would be more at risk if rates begin to rise. And so the profitable technology companies is a big area to focus on. So big tech, but the profitable companies. A lot of semiconductors, some of the social media companies, some of the larger tech companies we can think of. Those would be the ones to be focusing on. They've done well. They'll continue to do well in a world of decelerating economic activity.
Well, we're joined now by Nanette Hechler-Feiderb, Credit Suisse's Chief Investment Officer for International Wealth Management and Global Head of Economics Research. Nanette, thank you so much for joining us, as always. So I'm not really sure I understand exactly what's going on in the market, because we knew about the Delta variant, we knew about growth concerns, and actually the market is always usually a step ahead. So is this a danger, Nanette, that actually what they're looking at is something different, that it's either double vaccinations not working as well as it can, or transmission, or something that's more sinister?
I mean, the market at the moment, especially when you look at the yields and where the bond market is going, is indeed pricing a certain concern about how the Delta variant and infection rates are going to affect, in particular, policymakers' restrictions on travel, on economic activity, even as vaccinations are perhaps not progressing as quickly as they should. And I still think, however, that this is likely to be a temporary phase, because vaccinations, if anything, are probably going to get more of a motivation for people to go and get themselves vaccinated, looking towards the next half of the year and indeed the entirety of 2021. Yeah. This is going to be a very strong year in terms of growth and inflation.
But so, Nanette, what is the market nervous about? Is the market, I guess, maybe just hesitant because it's difficult to see how we really get a grip on COVID-19? Or is it because they're just a little bit pricey at the moment?
I think generally speaking, the market, and just starting with yields first, is probably at a confluence of several factors. Number one, there is a lot of liquidity, and this liquidity glut is coming when there's generally a sense of frothiness in risk assets is going towards safe assets. This is what we have seen recently. But at the same time, the market is, I think, not really focusing on what is next, which is central banks' reaction to strong growth and especially persistent inflation that is spreading into more and more sectors. So there is a little bit of concern maybe to have also with respect to yields and where they're headed from these current levels. We think this is a transitory period and yields should be higher than where they're now.
So, Nanette, you think that, is it a summer months effect also, because maybe the market is a little bit quieter? And what does a policy mistake look like? Is it the market interpreting that actually there will be some kind of monetary policy change before it actually happens?
Certainly, there has already been a repricing of monetary responses and guidance for the next 1 year, bringing forward some of the rates changes as far as the Federal Reserve is concerned, initially from late 2023 to now earlier, and perhaps even before the end of 2022, and also the start of tapering. Jackson Hole is coming up at the end of August and will perhaps shed a little bit of light in terms of the forward guidance there. We certainly expect at Credit Suisse that tapering, especially on the mortgage-backed securities, might start before the end of the year.
So, Nanette, do you have a call on treasuries? I mean, does the yield reach 1% in the short term? And then, where does it go from there? And how do you build a constructive portfolio given what we've just said?
I mean, to start with, I would really say that any investors that have liabilities in US dollars should seize this window and this anomaly that is, or perhaps period of just general lack of visibility by the bond market to fix their liabilities, because I would be surprised that yields stay as low as they are now. That's number one. But coming towards a portfolio, I mean, in terms of diversified investment strategy, for sure, people that look towards bonds as sources of income should definitely give an emphasis to credits over yields and maturities or duration risk in their strategy, as we think that these yields are probably not going to stay where they are. Alternative investments are very good to add because of the flexibility and the diversification that they bring to the portfolio. And then as far as equities are concerned, this continues to be the asset class that is really best equipped to deal with the overall environment that we are going to see even confirmed in the current earnings season, which is one of recovery across the various regions, also with earnings picking up strongly in emerging markets, for example. So equities, high conviction themes, high conviction regions.
But Nanette, are you worried that actually some of the equities will fall short if they worry about COVID long term? So at the moment, there's a reopening, a repricing, and frankly, many markets thought that we'd be over COVID-19 by now when you had critical mass vaccination. What if this lasts into 2023? Are there certain industry groups that you would stay away from?
I think for the first half, everything that was really the big COVID recovery trade did really, really well. And now that we are seeing the spreading of the variants, etc., these sectors are perhaps just coming to the end of their really strong rebound of the first half, where there is certainly more anchors to hold to for investors that are a bit concerned just for the short term is in dividend yielding stocks. They are a defensive way, and the earnings, that the quality and the strength of the earnings that are coming up are also really supportive for the payout of dividends.
Nanette, thanks so much. Nanette Hechler-Faidherbe there from Credit Suisse joining us this morning. Now, coming up, a big beat at UBS. The Swiss lender sees a surge in its wealth management business. In the second quarter, we speak with UBS Chief Executive Ralph Hammers. That's coming up shortly, and this is Bloomberg.
I've always sort of pictured what it was going to be like. I mean, you know, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, 2 kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many people to be able to go up who could never have dreamt of going to space.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
The global supply chain is not working exactly as it should be. And so that's one thing. So you see a bit of inflation there, but it's transitory, so it should not be a real concern.
Well, that was the UBS Chief Executive Ralph Hammers speaking after a surge in the wealth management business actually drove a 63% profit jump at the Swiss bank. Now, for more, let's get straight out to Zurich and to Manus Cranny, who's been speaking with the UBS Chief Executive. Manus, great interview. Was there any sign of caution?
Really, not any sense of hesitancy. It's almost Churchill-esque. You've never had it so good. Now, he wasn't just as swaggering with that, but what Ralph Hammers delivered today, we spent about 13 minutes in conversation during the interview. It was a sense of confidence about the pipeline in M&A. I mean, this was a record for them in M&A in the investment bank. Yes, I know everybody's going to go, it's a wealth management company, Manus, focus on that. But permit me on the investment bank, Francine. The pipeline is good. This is a record deal-making session for them. I want to give you a comparison. Goldman Sachs, JP Morgan, their investment bank deal-making was up 83% and 52%. UBS, it was up 223%. Now, it's nowhere near the number of Goldmans, but the velocity in that side of the business. And then if you talk about wealth management, there was a little bit of caution in terms of, look, I'm judicious in all of the assets I look at, and the lending slowed down just marginally.
So, Manus, it was a really good set of numbers. How can they hold on to that? How difficult is it going to be from going from strength to strength?
So 2 things. A, the pipeline looks good within M&A. They're stealing market share. And this is the interesting part. They're taking market share when it comes to M&A. How the landscape for prime brokerage post-Archegos plays out, I still think it is a big gamble for everybody. What are you doing with leverage? There wasn't a great deal of discussion around that. But it's about lending. Doubling down in America, which is where they've seen perhaps the biggest volume of lending and the biggest opportunity for them. The big strategic review will not come until the end of the year. I was just sitting making a few notes before I came. This is a bank, it's a Ferrari, built by an Italian, driven by the Dutchman. So the question is, it's firing quite literally on all cylinders. You know, if it's not broken, you know, why do you try and reinvent the wheel? I think what we're going to see over the next 6 months, Francine, is what is the Harmer's statement of the next step. Jamie Dimon's buying businesses. He wants a digital bank in Europe. What's Harmer's going to do?
Manas, I love the analogy. I do know that, you know, Ferrari is becoming more green, but that's another story for another day. You also tried Chad crypto. What was his view?
I tried a lot of things in this one. I just thought, well, let's roll the dice on crypto at the end. Because the Americans, first of all, you know, you got to come back to the office. There's more flexibility if you work for the Swiss, more flexibility if you work for the French. But for the American banks, you're going to have to get back to the office. On crypto, the Americans are ready to offer funds to the wealth management. Time out here. Cautious on crypto, no final decision, but he wrapped it up nicely. And this is what I mean about a bit of swag. FOMO. I don't have FOMO. I don't have FOMO about missing out on crypto. So that's the message from this CEO. No FOMO in the house for UBS.
Yeah, I love that.
You know, Francine, there's one of a line from Noel Coward. There are black clouds over the white cliffs of Dover, and the rats are preparing to leave the BBC. There's a lot of issues on the table for markets, so a little bit of caution.
I have FOMO. Yeah, Manas, I have FOMO. The background, I don't know if there's...
I have FOMO every day.
But I mean, beautiful. Manus Cranny there in Zurich with a wonderful interview with the UBS Chief Executive, Ralph Hammers. We'll have plenty more, of course, of that interview throughout the day. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. America should avoid travel to the UK because of a surge in COVID-19 cases. That is the warning from the US State Department. The move comes after the US CDC raised its UK travel alert to its highest level. The country added more than 100,000 new cases over the weekend. Now, vaccine certificates are set to become a requirement to enter nightclubs and other large indoor venues in England from the end of September. The proposal marks the shift for UK Prime Minister Boris Johnson, who's been reluctant to endorse compulsory vaccine passports. Nightclubs in England reopened yesterday. That was for the first time in 16 months as the country swept away virus restrictions. Key Chinese cities, including Beijing, are warning of new power cuts as historic demand and supply shortages strain energy grids. Electricity users have been told to expect planned disruption in order to avoid overloading the networks. China's State Grid Corporation says 11 provinces reported record demand and peak surges last week as temperatures there soared. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, Electrolux slips as much as 9% after its second quarter results. We speak next to the Chief Executive, Jonas Samuelsson. This is Bloomberg.
technology landscape has gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Electrolux has reported an operating profit for the second quarter that missed estimates this morning. The world's second largest home appliance maker is sticking with its regional market outlook for the year, even as it admits component shortages are likely to have a greater impact in the second half. Well, we're now delighted to be joined by the chief executive of Electrolux, he's Jonas Samuelson. Mr. Samuelson, thank you so much for joining us this morning. When you look at some of the good mornings. When you look at some of the component shortages, has it actually led to you losing business and customers?
Well, we have to remember that we're operating at an extremely high level. I mean, our organic sales growth in the second quarter was 39%. So at those levels, we're operating at the max of, I would say, what the supply chain is able to deliver. And I think the challenge that we're facing right now is to get the right mix of particularly electronic components, semiconductors at the right time. So yes, that is impacting the mix of our output a little bit, and on the margin also volumes. But I think that's the factor for the industry in general, not something that's specific to us.
But for you, is it possible to quantify actually how much sales you've lost, or how much it's affected sales because of the supply because of the supply chain constraints, I would say, and also the component shortages?
Yeah, it's not particularly significant in Q2. It is impacting our cost as there are some production inefficiencies. So sometimes there's some intermittency in supply, so that impacts manufacturing efficiency. There's also higher logistics cost as there's more express freight and flying in components and things like that. So that's impacting our cost. Volumes have been somewhat impacted, quite marginally, I have to say, in the quarter.
Talk to me a little bit about how you think you'll be able to pass on some of the higher prices for consumers, for customers. Are you worried that actually they'll go to other brands that are cheaper because of it, or are you confident that it's okay?
Well, generally, I would say in our industry, and this has been the case for a long time, and we've been quite successful in passing on these cost increases for the last several years. The tendency is that when costs go up for the industry, the price level tends to go up. It's fairly normal, I would say, in a lower margin, let's say, industry where there's no other way to go than to raise prices. And we've done that successfully, and we intend to continue to do that. We've announced additional price increases that we're implementing as we speak, and so far that's going really well.
Is that because of input costs as well? We're trying to figure out where inflation ends up. Do you see the world being in an inflationary environment right now because of the recovery and because of the reopening?
Yeah, I think this sudden spike in demand that we've seen in terms of consumer durables, really globally, not just for appliances. I would say the global supply chains, whether it's for steel or plastics or electronic components, has not been sized for this level of demand, and that results in cost increases. We have to manage through that. We don't think that that's really a long-term permanent situation, because we're not talking about components that have a fundamental lack of supply. It's just that demand right now is outstripping the installed capacity in several categories. And we'll manage through that, through pricing, through managing our promotional programs and so on, to cover those cost increases. So it's not something that is of any particular concern to us.
Mr. Samuelson, I think you've said that the global supply challenges will actually, I don't know if it's accelerate or have a higher impact in the second half of the year.
Yeah.
What does that mean?
Well, it means that, as we've progressed now with very high levels of demand, meaning that we're operating our facilities on overtime, and so are our suppliers, the supply lines have gotten increasingly stretched. So the margin to absorb variances in demand is lower, as there's very limited component inventory in the supply chain. And that means that any change in mix, any change in demand, we have a lower ability to respond to that. So that could result in a higher impact in the second half of the year.
Mr. Samuelsson, I understand this is probably difficult because of the nature of the work of your employees, but how many people are working from home? How do you see that developing for your office workers? Are they back in the office full time, or is there going to be some kind of hybrid system?
Yeah, our office workers still, by and large, are working from home for the majority. We have recently introduced a new return to work policy that we, as individual countries are opening up and allowing the return to the office, we will implement a hybrid approach where teams are able to work, a few days a week remotely and a few days a week in the office with a lot of flexibility.
Wonderful. Thank you so much for speaking to us this morning. Jonas Samuelsson there, the Chief Executive of Electrolux, joining us. I think the share price is still down some 8% after those results this morning. Coming up, but we'll have plenty more from our conversation with the UBS Chief Executive, Rolf Hammers. We get his thoughts on earnings, working from home, and also cryptocurrency. The broader markets, after the sell-off we had yesterday, they're stabilizing a touch. Actually, stocks are rebounding, earnings rolling in. This is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
A big beat for UBS. The Swiss lender sees a surge in its wealth management and investment banking units in the second quarter. Stocks rebound after a brutal Monday as investors reassess the prospects for growth. Bitcoin slips below the closely watched $30,000 level. And the U.S. raises its UK travel alert to the highest level, throwing doubt over its plans to reopen air routes, while Singapore stops inside dining. Good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 20th of July. So growth concerns have suddenly taken hold of the markets as investors worry about the potential spread of the Delta variant. Now, Treasury yields have fallen to their lowest since February, with the 1% mark now likely in sight for some traders. So let's talk markets with our very own Eddie van der Walt, who is a contributor and also in charge of our MLive team. Eddie, thank you so much for joining us. Look, I'm confused because it seems that the market, so yesterday was a sell-off. Today, we're kind of off the lows and regaining a bit of ground. I'm just not 100% sure what they're seeing. I mean, I've heard, it's because the press hasn't been focused on Delta, and now they are. Yeah. The market are always a step ahead. Am I wrong?
No, you're absolutely right. And I think some of that is definitely happening. I think what we're seeing here, on the one hand, is worry over the Delta variant. There's definitely, an increased spread. And that's just, everybody was talking about the reopening trade coming into it. But right now, it's Tuesday, turnaround Tuesday is a known phenomenon in markets. I think that might stick because the mantra in markets over the last 2 years or so has been buy the dip. Every single time, market buys the dip. And I don't see why this time is going to be particularly different. So I think there is worries. There's a lot of reasons to be worried out here, but I think there's still a lot of money trying to get into stocks.
So what would be your main worry? That is it to do with central banks? So we're not really worried about inflation that much anymore, but it's that central banks kind of move too quickly, and that the Delta variant means that the economy, that it's difficult to get a handle over this.
It's really interesting. If you look at the economic data, we should be, at peak worry over inflation right now, but we're not. And it's, as you say, because the market is, forward-looking, and the market is a step ahead. And the market's looking at things like the oil price coming off because OPEC's had a deal. The market is looking at things like reopening and saying, listen, we're going to see a pivot away from goods. We're going to see a pivot to services. And if people spend more on services, that takes some of the supply chain pressure away, which I think in the long run, just takes the pressure off inflation. And then, so I think there's a number of reasons why right now, I think that goes away. And that is part of what we've seen, the bid in bonds. But then the bid in bonds pulled some of the money out of the stock market, of course.
We haven't talked about Bitcoin for at least 2 weeks, or at least I haven't with you.
Right.
I mean, it's now below 30,000.
Yeah. Well, Bitcoin is an interesting asset, if nothing else. What it needs people to talk about it. It's a classic Veblen good, which means the more we talk about it, the more people buy it, the more the price goes up. When the price starts going down, some of that oxygen is being sucked out of the air, and Bitcoin struggles to keep rallying. And I think that's what we're seeing here. I think there are also, a lot of other interesting trades that are happening at the moment, and it's just taking away from Bitcoin a little bit. And I think that's why. But I think, this downtrend, potentially it could go further.
So in terms of asset classes, what is there one that you're actually watching more than the others? I know there was, yesterday was treasuries, right? It was all about treasuries, and now we're looking at a possible 1% yield.
Yeah.
I mean, that would be pretty significant.
Yeah, absolutely. Look, I think that's key. I think we're going to see. I think what we're moving back to is, we're going from the reflation trade back a little bit to the everything rally. Because if we say that we're going to see, if we say that we're going to see a little bit of the inflationary pressure come off, then what we say is the central bankers can keep rates lower for longer, which then supports equities and it supports bonds. So I think that's where we're going. I think we're going back to that early post-COVID era where we could see, just an advance in everything for a couple of months.
Eddie, thanks so much, as always, our Bloomberg MLive team member there, Eddie van der Walt. Now, onto banks, and UBS posted better than expected second quarter profit. It also added $25 billion in new wealth management assets during the period. Manus Krani spoke to the chief executive, Ralph Hammers, and started by asking him about those figures.
We had a really good set of numbers this quarter, and there's a couple of things here. So on the income side, we grew income by 21%. The cost increased by 10%. The profit before tax came out at $2.6 billion, which is a record quarter result. And it's really on the back of strong commercial momentum. So clearly the markets are positive, but beyond the markets, the way we deal with our clients, I talk to clients all the time, they need the advice. They're coming out of COVID, they are coming out of lockdown. They want to know, do I have to digitalize more? How do I build my scale? do I have too much delay on my investments? Do I need to acquire a company? And it's all of that activity that you see both in the markets as well as in our banking activity, in our banking operations.
And certainly on the M&A side in the investment bank, I think it's your best quarter ever. What is the pipeline like? Where are you strongest in terms of mandate winning on the M&A business?
It's literally across the board. Over the last 6 to 8 quarters, we've truly focused on a couple of sectors that we wanted to be our sectors, the TMT sector, the industry sector. And what you see coming through is that focus, and I've been pitching myself in a couple of cases as well, and that real care for the clients and helping them to find the right candidates to acquire or to find the right way to issue capital. It is that what's paying off right now. And we're actually gaining market share across the board, specifically also in the EMEA region.
Is there pent-up desire to do deals?
Yes, there is a real desire to do deals, but there's also a necessity to do deals because I think that most companies have been standing still, and we had to stand still in the pandemic. And when you come out of the pandemic, you make your new analysis, like we did it as well, like I did it as well in the first quarter. And all the CEOs are now looking at, okay, guys, where is this world going? And where do I take this company? And then it's always a combination of organic improvement opportunities and inorganic opportunities as well. And that's where you see a lot of the demand coming from at this moment.
On the lending side within the wealth management business, you look at the first quarter globally to the second quarter, there seems to be a slight slowdown. Where are you lending the most amount of money to, and did it slow down?
I wouldn't say it slowed down. We still had the net new loans of 8 billion this quarter versus 11 billion last quarter, which is annualized still mid-teens.
Okay.
Yeah, so it's really growing fast. We are growing fast in loans in the US, where we are in our wealth business under-penetrated in comparison to our peers, and we see an opportunity there to support our clients. So that's where we see quite some growth in lending. But also here in Switzerland, you see the confidence back in with the people buying houses and the mortgage portfolio growing as well. So it's a mix.
Well, that's UBS Chief Executive Ross Hammer speaking to Manus Cranny. Coming up, the billionaire space race continues as Bezos follows Branson and is due to blast off beyond Earth in the coming hours. We have the full story next. This is Bloomberg.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astercoma carinata.
I nailed it.
It's not thera, whatever. Astercoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. EasyJet has reported a headline pre-tax loss of just a third quarter for just over £318 million, better than analysts had forecast. The airline says demand in its UK home market remains depressed, pushing it to transfer more capacity to mainland Europe as it looks to salvage late summer bookings. ExxonMobil has recruited a company outsider for the first time to join its inner circle of managers, just weeks after it suffered a stunning setback at the hands of a tiny activist investor. Catherine Meikles will join the oil giant as CFO next month from Diego. She'll be the first woman among the ranks of Exxon's senior vice presidents. And Bloomberg has learned that Apple is pushing back its return to office deadline by at least a month to October at the earliest. The company is responding to a resurgence of COVID variants across many countries. Apple will give its employees at least a month's warning before mandating a return to offices. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Jeff Bezos is only a few hours away from blasting into space on Blue Origin's first manned rocket launch. Now, our U.S. West Coast reporter, Ed Ludlow, has a story from the launch site in Van Horn, Texas.
If all goes to plan, New Shepard will generate £110,000 of thrust, propelling Jeff Bezos, Mark Bezos, Wally Funk, and Oliver Damon up towards the Kármán line, 62 miles above Earth. As they approach, the New Shepard booster will separate from the capsule. The capsule will carry on beyond the Kármán line to about 66 miles above Earth. It's not far enough to escape Earth's gravitational pull, so the capsule, after a few minutes of weightlessness for the astronauts, will start falling back down to Earth, using its own air resistance, the flat bottom of the capsule, to slow itself down. There will be some drag chutes that are then fired, and as it nears the Earth, 3 large parachutes will deploy with a sudden burst of air from the air thruster just before the capsule hits the ground. As of Monday evening, all astronauts have completed their brief 2-day training, but as always with any launch, weather, especially here in West Texas in the summer, is a factor. For Blue Origin, it is a substantive step forward in what has been slow progress. Jeff Bezos founded the company in 2000. He acquired the land here in West Texas for the Blue Origin site in 2005. The launch pad for New Shepard was not built until 2014. And in that time, what's happened is SpaceX has really leapfrogged Blue Origin in terms of technology. It's really won most of the commercial contracts from NASA and other private sector partners. And Blue Origin wants to catch up. Providing paying customers just a few minutes of weightlessness was the original goal for the company, but now it's just the tip of the iceberg in terms of the ambition that Blue Origin has. It wants to compete with SpaceX and other private sector carriers for those satellite contracts, for the lunar lander contract for 2024, which SpaceX was awarded and Blue Origin has appealed. It also builds engines for other companies like ULA. And then Bezos has this grand vision of the future where the human race is a spacefaring race and we can look to the galaxy for natural resources. But first things first, an 11-minute flight up to the Kármán line for just a few moments or minutes of weightlessness before buckling back and falling down, experiencing forces of 5 times the Earth's gravity on the way down. Ed Ludlow, Bloomberg News, Van Horn, Texas.
That was our Ed Ludlow. Now, don't miss our special coverage of the Blue Origin launch. That starts at 1:30 p.m. London time. That's 8:30 a.m. on the U.S. East Coast. Now, let's discuss the Blue Origin launch and more on the new space race with Rob Desborough. He's founding partner of Seraphim Capital. It's a London-based venture capital fund manager thematically focused on space tech. Now, in March 2021, Seraphim Capital also partnered with Amazon on the AWS Space Accelerator program. Its goal was to select 10 startup companies to receive up to $100,000. So, Rob, thank you so much for joining us also on such an exciting day for all space lovers out there. Rob, so you started looking at space tech and space more generally in 2015. I mean, in the last 6 years, that space must have changed so much. What do you think the next frontier is? Are we actually going to use space as tourism, or is it for exploration of other things?
Thank you, Francine. Yes, it's a really exciting day for us. And I think what's so exciting is that these billionaire pioneers in space are really pushing the boundaries of what can be achieved. And for us, space is $1 trillion market opportunity, and space tourism represents a relatively small aspect of that. Really, for us, the billionaire entrepreneurs have completely changed the economics in terms of accessibility to space. They're putting us in a position where they're building a space superhighway, a logistics superhighway, enabling us to build the future digital infrastructure. With space data, it will allow us to map, monitor, measure, and manage every centimetre on Earth and address some of the world's most pressing challenges we have today, from connectivity through to climate change. So we're already seeing nearly 8 billion in private investment being invested into this sector, matched by 7 billion in public investment. So it's a really exciting.
So Rob, what's the most exciting? Yeah, so what is the most exciting part? I mean, if you look at space tech, and as you say, there's a wide range of things that you can be invested in. So there are very different angles for you to look at this. What do you think is the most exciting in the next 2 years?
I think for us, it's actually about how we use Earth observation data, how we can actually map, monitor the planet in near real time, and look at things like crop yield within agriculture, or change detection and mapping when we're looking at how we look at disaster survival and recovery. Or if we move out a few years, how we can look at precision GPS systems for a future autonomous world. So there's many exciting things happening at the moment.
Rob, when you look at, I guess, today's launch, the launch that we had a couple of weeks ago, does it actually help with investments? Do you see more capital going into the space, again, just because it captures the imagination, or is it still the few, venture capitalists that actually know that have been doing it for a while and know what they're talking about?
Absolutely. I think these are fantastic figureheads for the industry, but they are ultimately building the infrastructure which is allowing startups to now access the space domain and is building out that industry. Amazon and AWS are building a huge cloud infrastructure which is really catalyzing the speed that startups can now build and address opportunities within space across SpaceX, Blue Origin, and also Virgin Orbit. They're reducing the cost to access space for startups as well. So we're really at a point of inflection now, and we're seeing thousands of satellites being launched every year, as opposed to a couple of years ago, we were seeing less than 100. So this is a very exciting period.
Does it make a difference, Rob, if some of the technology that you're looking at is based in the US or based in Europe? Is there a kind of a space tech race amongst the regions?
I think we're certainly seeing a growing space tech race. At the moment, we invest globally through our investment fund. A third of our portfolio is in the US, a third in Europe, and a third in the UK. And I think probably we're seeing the majority of the activity in the US, but the UK is a fast follower there and is probably third in the world in terms of small constellation development after the US and China. But we are seeing competition across Europe, and other funds are being raised to focus on this opportunity in new space.
Rob, I was going to ask you actually, how does China fit into all of this?
Well, China is somewhere that we all have to be aware of. It's probably second after the US in terms of the amount of venture capital going into that market right now. Clearly, we have considerations with regards to intellectual property and how we engage with China and also Chinese investments as well. Space is increasingly an area that we need to look at from a domain security perspective as well. And we have the national security concerns around that.
Rob, how much bigger do you think Seraphim Capital will be in the next 4 to 5 years? So how much capital can you actually attract as this industry grows and become, I don't know whether we call it mainstream, but certainly becomes more prominent?
Well, it's an exciting time for us. As we launched the world's first venture fund focused on new space. We recently raised a £180 million fund on the main market of the London Stock Exchange. That new fund gives us long-term patient capital, and our vision is to grow that from 180 million currently to over $1 billion over the coming years. We believe there's a very significant opportunity out there, which is demonstrated by the recent IPOs happening in the market, to deploy significantly more capital into this area. There's real appetite, but what it needs is lead investors like Sarah from the space who can do the due diligence and drive these opportunities forward, and that will enable future capital to come in.
Rob, thanks so much. Rob Desborough there, founding partner of Seraphim Capital, joining us this morning. Now, coming up, the do not travel warning. Well, the U.S. raises its alert levels for the U.K. amid a virus surge and the lifting of restrictions. More on variant fears next. This is Bloomberg. What does it change for your July 22nd meeting?
Well, we have a framework. We have a new framework that is unanimously approved by the Governing Council, and we're going to look at, as we always do every 6 weeks, we're going to look at the circumstances, we're going to look at what forward guidance we need to revisit. We're going to look at the calibration of all the tools we are using to make sure that it is aligned with our new strategy. And I think that, you know, given the persistence that we need to demonstrate to deliver on our commitment, forward guidance will certainly be revisited.
Does it give you extra tools? So on July 22nd, it's actually a bit, I mean, it was always a big meeting, but it's an even bigger meeting because it's not only something technically, right? It's not technical change.
You know, it's going to be an important meeting because, number one, we're going to communicate differently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the U.S. has raised its travel alert for the U.K. because of the ongoing surge in cases. The State Department issued a do not travel statement after the CDC boosted its alert to very high. They said even fully vaccinated travelers are at risk of contracting and spreading variants. Well, joining us now is our Bloomberg Intelligence senior pharmaceutical analyst, Sam Fazeli. Sam, there are a number of questions now also that the markets are turning on this, that we have on this variant. How different is it to the other one? I mean, do we still know I'm double vaccinated? If I, you know, what's the likelihood if I come into contact with someone of catching it and still passing it on?
Yeah, so the Delta variant, Francine, and good morning, does have an ability to escape vaccine immunity, that original, the first shield that you've got against an infection, a bit more than the original virus or the Alpha variant, for example. Not massively, but certainly it is more able to escape that immunity. But of course, everybody keeps talking about hospitalizations, etc. I think on that front, we're relatively safe. But you are more likely to catch the Delta variant versus the alpha variant or other variants. And that is the problem, I think, that people are worried about, because even if you're vaccinated, you could catch it and then pass on the virus.
And so what does that mean, Sam? Does it mean that actually we're going to see a resurgence in cases at the moment? So the UK is open, England's open, and there's not that many people in hospitals. Is that just because of the time lag, or is it because of the nature of this variant?
No, it's actually partly the time lag, but certainly to do with the ability of vaccines to stop the development of more severe disease. They don't completely stop it, but they have a significant impact. And we just wrote something on that end of last week showing the difference. That is pretty well established. The thing is, you can still have the virus, you can get severe disease, but you certainly can pass it on to somebody else, because this virus has got this strange ability, which has been now discussed a bit more detail in research, of having much higher viral loads in our nasal passages, etc. So you have a much higher opportunity to pass on the virus.
Sam, thank you so much for all of your insight. As always, Sam Fazeli there of Bloomberg Intelligence. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of New York, actually, with Kaylee Lyons. We'll look at the markets, we'll look at treasuries. Of course, there are a number of other things we're watching, including the space race. This is the day that Jeff Bezos blasts off. And then I'm also looking at the market correction from yesterday. You're seeing a reversal today with stocks up and futures also gaining. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance and more.
2022年完成空间站的在轨建造，建成国家太空实验室。之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station. China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Curtain will rise again.
Broadway's returning June.
Have you bought tickets?
Is busted out.
You've got more time here. Have you
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Bloomberg.com webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
A lot of investors are buying bonds for almost like catastrophe insurance. If things go really badly wrong and the economies collapse because of COVID or something else, then have some insurance, put away.
I feel like the bond market is in a limbo. We're waiting on a whole bunch of other factors to come into play for fundamentals to improve and for Treasury yields to rise.
The real risks right now, one is rates. Prospect is from this point forward, perhaps go higher. Taxes, both corporate taxes and also capital gains taxes. Those are your big risks.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, July 20th. Our top stories today. Having second thoughts about the recovery, while long-term Treasury rates fell to the lowest level in months. UBS's soaring profits come with a warning. The Swiss bank expects client activity to slow down in the third quarter. And Billionaire in Space Part 2, Jeff Bezos gets his chance to show the right stuff a few hours from now. Well, good morning, everyone, and welcome to the program. There's quite a lot going on, Kaylee. I'm looking forward to, of course, the space race to see what billionaire is doing what. But if you look at the markets yesterday, look, we saw concern that was playing out in treasuries. Today, there's less concern about growth because it seems that the markets are focusing on earnings, and it's giving a lift to a lot of the equities.
Yeah, Francine, I'm not sure if the market is no longer just worried about growth. Maybe there's just a little bit of dip buying, but technically nothing is true this morning that wasn't actually true yesterday. And we did in the Asian session see some follow-through selling from those losses we saw in the U.S. The MSCI Asia Pacific Index down about a full percentage point. The big standout from an index perspective was the Nikkei 225 in Japan, off 1%, but actually its fifth down day in a row, entering a technical correction. Of course, fears around the Delta variant really weighing on those cyclical Japanese equities. One individual stock story to watch in Asia, as well as what's happening with Evergrande, of course, the Chinese developer, concerns about its financial health really weighing on investor sentiment. The stock fell 16% yesterday and another 10% in today's session, now at a 4-year low, and the bonds have been taking a beating as well. And in foreign exchange, I would note the big underperformer in Asia is the Singapore dollar, weaker against the U.S. dollar by around 0.25% as restrictions around COVID-19 retighten in Singapore because of the Delta variant. And here in the U.S., of course, it was a pretty wild trading day yesterday. We saw the cyclical stocks in particular under pressure, but it really was broad-based selling. Today, though, maybe a little bit of buying of that dip, with S&P 500 futures up about 0.5%. The real action, though, was in the bond market. The 10-year Treasury yield yesterday falling 10 basis points to sub 1.2%, the lowest level since February. This morning, we are ticking just higher, but still underneath that 1.2% threshold. It is a stronger oil story today. Crude is up about 0.1%, but nowhere close to recovering yesterday's losses of 7.5%. You have supply and demand concerns factoring in, as well as a stronger dollar. And then finally, I haven't talked about Bitcoin in a market check in a while, Matt, but it is worth noting today it is back below that closely watched 30,000 level, trading at 29,700 a coin or so, Matt.
Yeah, I think when it comes to risk assets other than Bitcoin, it's really about buying the dip today. And maybe that's why Bitcoin is down. Maybe the kids are selling Bitcoin, liquidating some investments in order to reinvest in the stock market. Here you see Europe, when we're looking at gains across the board, just like you said with oil, Kaylee, they're gains, but they're nowhere close to making up for the kind of losses we saw yesterday. We were down 3% and change yesterday in some of these indexes, and we're up 0.5% on the DAX today. You can see the broader stocks Europe 600 is gaining about 0.6%. German bunds, I think it's interesting, still down to their lowest point since early February. So a drop here in bund yields, negative 41 basis points. The pound also losing some ground against the dollar right now, 136.61. The euro is losing ground against the dollar, as well as the greenback. Basically gains against all other major trading partners. And UBS, I want to point out, obviously we're going to be talking a lot more about this. Manus Cranny interviewed the CEO. The company came out and beat earnings, also adding to the amount of money that it manages. The shares up 4%. They're pretty heavy weights on the stock 600, so really helping to pull the broader index up, Francine.
Yeah, Matt, there's also a wonderful piece by our John Authors actually looking at some of the authors' indicators to look at inflation. And he says, look, if you see underlying inflation, as we all know, is there. But it's interesting that the market is just not focusing on it that much now. So it feels like they're always a step ahead or maybe a step behind. Let's look at what else is ahead today at 8:30 a.m. New York time. Bloomberg presents a special live coverage as billionaire Jeff Bezos blasts off on board the first crewed flight of his rocket company, Blue Origin. Then a little bit later, the Economic Club of Washington, D.C. hosts a conversation with the U.S. Secretary of Transportation, Pete Buttigieg. And here comes the tech earnings parade. Netflix expected to release its second quarter results at 4 p.m. New York time. So let's begin with the billionaire space race, the part two. Jeff Bezos only a few hours away from blasting into space on Blue Origin's first manned rocket launch. And we couldn't be happier to have Emily Chang join us live now from Van Horn, Texas. Emily, it's so exciting for actually everyone watching, and you must be very excited on the ground. How different is this going to be to what we saw with Richard Branson?
Francine, it's going to be very different. First of all, I am at Blue Origin headquarters. The rocket is on the launch pad right behind me. We are about 4 hours out now from launch. And if you watched the Virgin Galactic launch, you saw that that was basically a high-altitude space plane, a mothership taking that space plane up, dropping the plane, that plane then going up into space and coming back down, landing on a traditional runway, much like an airplane. The whole flight altogether over an hour. For Jeff Bezos and his crew today, this will be a vertical up and down flight. The rockets that we grew up with, just 11 minutes. A few minutes after taking off, the crew capsule will separate from the rocket, will go on up into space. Bezos and his crew, his brother, Wally Funk, who will become, if all goes to plan, the oldest person ever to go into space, and Oliver Damon, an 18-year-old kid who will become the youngest person to go to space. All of them will experience this 3 to 4 minutes of weightlessness, and then they will start descending back to Earth, parachuting down and landing here, hopefully safely, in a cloud of desert dust. No pilots on board. There were 2 pilots on board the Virgin Galactic flight, but the Blue Origin flight is completely autonomous. So they tell us, even if there were pilots on board, if something went wrong, they couldn't really do anything. And Jeff Bezos and all of these people have been through 14 hours of training over the last couple of days, and they're prepared for all of the emergency scenarios that perhaps could play out. You know, they know what to do in those situations.
Emily, what's the play here for Jeff Bezos? I mean, for Richard Branson, it's clearly like a tourism thing. Elon Musk seems to be kind of a shipping guy when it comes to his space abilities. What does Bezos, want to do with Blue Origin in the long run?
You know, Matt, it's interesting. They all have completely different visions. Richard Branson is entirely focused on space tourism, getting people to pay, you know, whether it's $250,000 a pop or the price goes lower, that much for a ticket for that ride and that ride alone. For Jeff Bezos, space tourism is just part of the story. He has this vision of space colonies being built out in space, and people living and working there, large industry moving up into space and being powered by solar energy out in the solar system. He believes that Earth is the best planet, that we don't want to leave Earth, we don't want to go to Mars, we don't want to live on the moon. Those places are inhospitable. But if we want Earth and civilization to continue to develop, we need to explore space in order to mine these additional resources. And by the way, we did see a cameo of Jeff Bezos yesterday. He dropped off some dinner for the press corps here at headquarters, his mother's favorite family recipe, and someone asked if it was his last meal, and he said, "We're not going to talk about that, and enjoy the food." So, you know, hopefully all goes to plan. As we understand, they have an early refresher course this morning, but now we're less than 4 hours away.
I gotta say, he looks like he's in very good shape as well. So, Emily Chang reporting on the ground from Van Horn, Texas. Of course, we're going to be covering this all day. Stay with Bloomberg for full coverage of the launch. Our exclusive coverage starts at 8:30 a.m. New York time. That's 1:30 p.m. in London. The launch is expected just about 30 minutes later. Now let's get back to banks. UBS posted a better than expected second quarter profit, with CEO Ralph Hamers owing the success to new assets and higher fees.
We had a really good set of numbers this quarter, and there's a couple of things here. So on the income side, we grew income by 21%. The cost increased by 10%. The profit before tax came out at 2.6 billion, which is a record quarter result. And it's really on the back of strong commercial momentum.
Bloomberg's Manus Craney joins us now live from Vienna. So, Manus, what's the takeaway from the incredible quarter that UBS had and the outlook from Ralph?
Matt, I got a real sense of confidence from Hammers and the team. His demeanor was one of, look, these numbers sort of speak for themselves. The pipeline is pretty good in the investment banking side, and they're taking market share in the EMEA division. So that's going to be music to the market's ears. Just some percentages for you. If you think of the investment banking at Goldman Sachs and JPM, Goldman Sachs, their M&A business was up by 80%, JPM up 52%. For UBS, it was up 223%. Not at the staggering numbers of Goldman's, but that just shows you the velocity that when it comes to doing deals and supplying the wealth management side of the business, it really is a bullet train that is moving. On the wealth management side, it's about lending. Okay, the overall lending number dropped relative to the first quarter, but I got a sense from Hammers, both during the interview and offside, is that there is this pent-up demand. Here in Switzerland, there's remortgaging. They're lending with gusto in the United States of America, and that's where they're going to double down. Perhaps nothing as sexy as Bezos and flying to the moon, but this is a pretty powerful beast of a Swiss bank which is moving. Look at the stock price. Hammers is going to have to develop some kind of strategy that really reignites the pricing of UBS, back up to the 20 Swiss francs a share. That's the ambition, and that's going to take a certain amount of re-engineering and perhaps some deals. Jamie Dimon wants a digital bank in Europe. What's Hammers going to go after?
All right, we're trading around 1388, up 4% today. Bloomberg's Manus Craney, thank you so much. And turning back to the markets, investment strategists are starting to consider a new bearish scenario that the economy has already hit its speed limit. Bloomberg macro strategist Laura Cooper joins us now for more. So, Laura, is that what we can chalk up yesterday's move to, just fears around slowing growth?
Well, certainly, I think peak growth fears in the U.S. did play into the bond rally extension that we saw yesterday. That was kicked off by those renewed restrictions across Australia. We did see that spread through Europe. But again, this is a U.S. 10-year Treasury yield that remains about 60 basis points below its February peak. Now, that indicators do suggest that's largely flow-driven, less than fundamentals. We do have pension demand, hedging protection against those peak growth fears. But again, it's really the question of, yes, momentum does suggest we could see a 10-year Treasury yield of 1%, but is that really justified against this still robust economic backdrop?
All right, Bloomberg's Laura Cooper, thank you so much. And turning now to some of the micro stories in the market, stocks moving in pre-market trading here in the U.S. I want to begin with IBM, which reported earnings after the bell yesterday. The strongest sales growth in 3 years, thanks to the shift towards cloud computing. As a result, that stock up 3.8% in early hours. Another stock moving to the upside for a second day is Novavax, of course, the COVID-19 vaccine maker, up 13% yesterday, up another 3% this morning, aided perhaps by concerns around the Delta variant. And of course, those variant concerns weighed on the travel complex yesterday. And actually not just yesterday in the case of Norwegian Cruise Lines. It's lost 20%, falling every day in the last 6 sessions. But maybe some dip buying coming in today because that stock is higher by 2.4% in early hours, Francine.
Yeah, I don't know who'd get on a cruise line right now. Maybe, I mean, okay, that's conversation. In 3 minutes, we'll talk about where would you go? Maybe the Black Sea or something exotic. Maria Weitmane, she's coming up next. We'll ask her about travel and leisure. She's senior multi-asset strategist at State Street. This is Bloomberg.
to the top about the mission as you see the evolution of fintech enabling what you call democratization. Do you think finance is becoming democratized, truly democratized at the moment? The fact that we're still having discussion about whether you can get in on IPOs, for example, are you feeling that the opportunities are there for anyone to be able to start to make their way within the financial world?
Look, there's always going to be progress to be made, but I think there are many brands now helping the unbanked and the underbanked, right? I think we've seen a lot of success in where digital disruption can really help with some of those groups. That's not really our target audience. We do want to offer great advice to everyone, but I think that there are a lot of other folks going after that marketplace. But there's always more progress. There's always more progress we can make. And sure, you're right. In places like private investing, and there are still sort of pockets of the market where you have to be in the know.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You should never invest in something that can't be simplistically explained to you. The very, very good investment advisors can take complex matters and make them very simple.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York. Francine Lacroix is in London. Now, we saw a big sell-off yesterday, and today the kids are buying the dip. But Dan Curtis, who produces charts for us here in the Big Apple, has shown me that puts outweighed calls 2.5 times, and that's the highest ratio of puts to calls going back over a year. So what this shows you basically is that investors are either betting on a drop or hedging against the possibility of a market decline. You have to wonder why, since they seem to buy the dip every time we see a drop of 3% or more. I think that's happened 4 times over the last 12 months. And investors, maybe it's retail investors, maybe it's the youth on Robinhood, buying, especially in ETFs, and just driving us back up to new records each time. Joining us now is Maria Feitmana, senior multi-asset strategist at State Street, to talk about this. Maria, you've been bullish every time we've had you on. Why, though, especially in light of a record number of new COVID infections in the UK, 2 years into the pandemic, are we buying the dip still?
Yeah, hello, Matt. Hello, everyone. And you can always count on me to recommend to buy the dip. Of that ilk. I mean, to me, the really key drivers of this equity rally in the last 6 months. I think every strategist was really, really bullish on equities in kind of December and year ahead outlooks. Were 3 reasons: were better economic and earnings growth, very low interest rate, and lots of money on sidelines. We're 6 months into the rally, stocks very, very close to all-time high, but those 3 drivers are still there. We just started the earnings reporting season, and the result, I mean, not many companies reported so far, but results are very, very encouraging. Analysts are really excited about earnings. They're upgrading this year forecast, next year forecast, year after forecast. So it is very positive sentiment. I mean, interest rates are very low. Real rates have rarely been lower, and money on the sidelines are still there. We know companies and corporates have lots of cash to spend and invest.
Yeah, and you're right. If you look at the financial conditions, they also remain very accommodative. I don't know how to say that word. But Maria, at some point, I mean, when do you not buy the dip? So what would it take for you to say, actually, I'm going to sit this one out?
I think one of those 3 kind of arguments follows as that would be risk. I have to say we spent quite a lot of time in the last kind of 3-4 months worrying about what higher interest rates, what more hawkish central banks will do to equity markets. And that was a concern because a lot of kind of rally recovery is based on those accommodative conditions. I think I got it right. Right now, real interest rates are fairly low, and earning sentiment is very strong. And for us, what I'm really excited is this capex cycle can potentially be coming online. We had corporates underinvesting for a decade, government underinvesting for a decade. Now they are awash with cash, and they're about to spend. So for this earnings season, actually, that's something I'll be looking for to see what companies are talking about capex plans. We know the leading indicators for capex are quite elevated. Capex kind of expectation, lending conditions are very kind of encouraging.
Maria, that's all great on the equity side, but then can you just ignore the cues you're getting from the bond market?
I think this is a very interesting point, because those markets are a little bit in kind of disconnect. And we had a little bit of that situation last year as well, when bond market was quite worried. But I think accommodative, very low interest rates is actually a boon for equity market. I mean, no, equity right now is very long duration based. So having a lower interest rate is actually quite helpful for stock market.
Maria, thank you so much. Maria Weitmeier there, Senior Multi-Asset Strategist at State Street. Now, tonight, also on Bloomberg, JP Morgan's Mary Callahan Erdoes shares her wealth management tactics on Bloomberg Wealth with David Rubenstein. That's tonight at 9 p.m. in New York. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller and Katie Lyons in New York. Now let's get straight to the Bloomberg First Word News. And Senate Majority Leader Chuck Schumer has locked in plans for a cliffhanger vote today on whether to begin debate on the $579 billion infrastructure bill. Now, senators in both parties haven't agreed on the measure yet. The vote puts pressure on the bipartisan group negotiating the measure, but Schumer also runs the risk of an embarrassing defeat. And Treasury Secretary Janet Yellen is urging regulators to act quickly on stablecoins. That's a type of cryptocurrency that's seen rapid recent growth and remains largely unsupervised. Now, stablecoins' value is fixed to a national currency or commodity and is actually backed by reserves of that asset. The U.S. government is warning Americans to avoid traveling to the U.K. That's because of a surge in coronavirus cases involving the highly contagious Delta variant. Now, the warning came on the UK's so-called Freedom Day, when the pandemic-related restrictions were lifted. And Bloomberg has also learned that Apple is pushing back its return to office deadline by at least a month to October at the earliest. Now, the company is responding to resurgence of COVID variants across many countries. Apple will give its employees at least a month's warning before mandating a return to the office. Now, I know all three of us have tried to figure out exactly when the banks expect staff fully back, and that has also an impact on what kind of talent you can attract. And then I think Singapore just hours ago saying that they will restrict indoor meetings.
I wonder why. I mean, if you just say you need to get vaccinated and then come in, everything will be cool, right? As long as you're fully vaccinated, especially if you're taking PCR tests. I don't know why they take so long seemingly here. In Germany, you only need 5 or 10 minutes to get the results, but then you could easily have everybody back in the office.
Yeah, but I think that's the question, Matt, is are you really fully protected if you are vaccinated? That was what we saw with that warning from the U.S. around travel to the UK, that even if you are vaccinated, you still pose a risk to yourself and others. So I think that's still an open question.
I always pose a risk to
companies
myself.
And businesses...
And
I'll leave that comment there, Matt. I'm not going to respond.
I mean, you're going to be okay. You're going to be okay, right?
Well, we don't know that. I think they're still doing the trials. At least that's what our Sam Fazeli told us earlier this morning. But we'll dig deeper. Coming up, we're just hours away from the Blue Origin launch. Up next, we speak with Danielle Wood, director of the Space-Enabled Research Group at MIT.
E3 is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller and Katie Lyons both in New York. Matt, of course, if you look at the market, yesterday was a big markets day because of the sell-off. We looked at treasuries, now chatter that the treasury yield could go to 1%. I don't know whether we're buying the dip or the market, participants are buying the dip today, or whether they're focused on earnings, a lot of them in Europe coming in better than expected to kind of drive the narrative forward for growth being robust.
Right. Well, I mean, earnings were coming in better than expected yesterday as well, and earnings come in better than expected every single earnings season. So, I really think it's got to be buy the dip, because yesterday we said the market was down because of COVID. Today, are we less terrified of the spread of the Delta variant? I'm not sure. Judging by our conversations, I would say we're definitely not less terrified. So it's got to be that there's just this incredible inflow, and we got a great story about it on the Bloomberg, especially in ETFs, especially retail investors, just in the accumulation phase right now, and every time they see a dip about 3%, they fill that gap and push us to new records.
Yeah, I mean, we have a great, of course, live blog going. So if you're a Bloomberg terminal user, I suggest you go to check out MLive, and they're talking about the fact that cyclical stocks are still suffering some longer-term damage, maybe. Kaylee, what are you seeing in the markets today?
Well, it's interesting, Francine, because when it comes to those cyclicals and some of the reflation trades, you do have shops like JP Morgan saying the selling has been overdone and therefore a resurgence is coming. So we'll see if that is true. Maybe the selling was overdone for the equity market yesterday in that people are coming in to buy that dip today. As you were just discussing, the stock 600 in Europe up about 0.5%, as are S&P 500 futures, with about 4 hours to go until the U.S. Open. The bond market is where the really interesting action has been, though. A 10 basis point decline on the 10-year yield yesterday to sub 1.2%, and we are still below that level today, sitting at 119. What is the bond market trying to tell us about growth? And finally, just noting Bitcoin as well, because it is back below that $30,000 threshold, very closely watched. And of course, that is weighing on some crypto-tied stocks in pre-market trading here in the U.S. Riot Blockchain, Marathon Digital, Coinbase, all in the red today. One stock moving to the upside, though, is IBM. It, of course, reported earnings after the bell last night. The strongest sales growth in 3 years, really because of the cloud computing shift the company is making under the new CEO, Arvind Krishna. So that has the stock up about 4% in early hours, Matt.
You know, the Bitcoin story, I think, is really interesting. And I was talking with Anna Edwards on Bloomberg Radio this morning, and she suggested one possibility that I hadn't really thought of yet. Here you can see a Bitcoin chart. And for those of you listening on London DAB Radio, we welcome you. And I'll just say, we know it jumped up last year, came to about 65,000 and has been coming down ever since, but has been stuck in the kind of $30,000 to $40,000 range for the last few months. Now we're down below 30,000 for the first time in over a month. And Anna said maybe this is investors liquidating some of those crypto holdings in order to buy stocks, in order to buy the dip. After they saw yesterday a 3% plus drop in Europe, a 2% plus drop here, they went in with their Bitcoin cash to buy stocks. And I thought it was really interesting. That could be a possibility. I will note, Francine, that technical analysts say we could come all the way down to 20. They see Bitcoin trading in a range of $20,000 to $40,000 over the next 6 months.
Yeah, really interesting. We'll talk a lot more about the markets and, of course, I guess the parallels between equity and maybe some money going out of crypto. Now, the designer of Blue Origin's new Shepard rocket views today's launch as an early step in a generation-spanning vision. On the eve of Jeff Bezos' trip to space, Gary Lai sat down with Bloomberg technology anchor Emily Chang.
We don't think of it as a race at Blue Origin. We are in this for the long term. And by long term, I don't mean 5 years. I don't mean 10 years. The vision of Blue Origin is generation spanning. I will not see it happen in my lifetime, maybe not even in my children's lifetime. That is how long the horizon of Blue Origin's vision is. And I'm very excited to be part of this early step, but it will keep on going.
Well, joining us to talk about all of this is Danielle Wood, Assistant Professor at MIT Media Lab and Director of Space-Enabled Research Group. Danielle, we couldn't be more excited to have you on a day like today, so thank you so much for making the time. What exactly does a space exploration turn into? I know you believe this could be used for the greater good. We're also getting a lot of viewer questions saying, look, are we going to see some kind of compensation for some of these CO2 emissions? So what will space travel tourism look like in the next 5 years?
People often ask me why it's important to invest in space infrastructure when there's many challenges on Earth. I want to remind listeners that it's important to consider the government investments in space made around the world and how this already provides us with important infrastructure for some of our key needs on Earth, monitoring the weather, improving communication and positioning, responding to disasters, and even transferring some of the innovations that come from human spaceflight, helping us understand how the human body works in microgravity, developing new materials. The activities we see from companies like Blue Origin and SpaceX are contributing to advancing the number of humans that can go to space, but they're also building on many years of both their own research, about 20 years each, but also government research that's exploring what does it mean when things, animals, plants, humans, travel to space. There are research activities also happening through these kinds of flights. Blue Origin, for example, allows researchers, including like myself, to do experiments on their flights outside of the human space flights. And so they're also expanding scientific knowledge.
What about the idea, Danielle, that, you know, not that we have wasted this planet and need to find another place to live, but that we need to do less of the heavy industrial work here, less of the resource mining here, and that we can find ways to do that out in space?
This is an excellent question. I would like to argue that we should do our very best to preserve and to conserve our planet here on Earth, but also we should apply the same standards of behavior for how we conserve resources when we go beyond Earth. Already we have examples of the ways that humans have put many, actually hundreds of thousands, if not more, pieces of human trash in orbit around the Earth. So we have not set a good standard so far for how we treat the space environment. A place like the moon is very pristine and really driven by geologic processes that we're still discovering and understanding. But I recommend that we don't immediately assume the moon is a place where it's quote unquote morally okay to immediately create a lot of heavy pollution as opposed to Earth. I think the moon and Earth and orbit around the Earth are all places that are shared. This is part of United Nations treaty language, and we should consider how to keep all of them clean rather than moving our trash, for example, to a different place.
Danielle, we talk a lot here at Bloomberg about the billionaire space race and how it's all about, you know, two men, Jeff Bezos and Richard Branson, and Elon Musk is in that equation as well. Do you see what they're doing at SpaceX, Blue Origin, Virgin Galactic as advancing humanity's push into space broadly, or is it just advancing their own ambitions?
I think it has the potential to contribute, but if it's part of a bigger ecosystem that includes governments, universities, and companies, and of course nonprofits and people bringing points of view and philosophy, and even I would say indigenous communities that have a view on what we do in space. So the companies we're seeing, many of them were founded in the early 2000s, and they've been diligently working, sometimes with close collaboration with NASA. For example, we see SpaceX working very closely with NASA as part of the development and for providing services to NASA to bring crew to the space station. And this is not an isolation. The space community is very much a series of integrated organizations. So space is a global commons, and we have UN treaty language to show this. And when the services provided are to the broad public, this can bring benefit, but this is yet to be seen for these companies.
Danielle, what do you see as the most exciting piece of space technology that we're currently working on?
Well, I have to say I'm a little biased. I'm really excited about my team's work trying to bring beeswax as a fuel for satellites, which we're actually testing, to be in full disclosure, on a Blue Origin rocket coming up. But I'll also highlight opportunities to ask how humans can live and work successfully in space. The International Space Station is a great example of international cooperation. Really, in the year 2021, we've had people from multiple countries living together peacefully and productively, doing many kinds of research on the space station, trying to understand how to recycle food and water processes so we could have longer term life in space. And this is all preparing for a more, in a sense, renewable way of living, which could also bring back to Earth.
Danielle, thanks so much. We're also getting a couple of questions from viewers asking about, mining helium. So we'll have to get you back on to talk about some of these techs actually and how we could use them going forward. Danielle Wood, there, director of the Space-Enabled Research Group at MIT Media Lab, joining us. Now, stay with Bloomberg for full coverage of the Blue Origin space launch. That starts at 8:30 a.m. in New York. That's 1:30 p.m. in London. Coming up, though, Dr. Anthony Fauci pleads with the American population to get their shots as cases surge in states with low vaccination rates. More on that next. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
What we're seeing now in this country is a significant uptick in infections, particularly in those areas of the country, those states, cities, regions, counties that have a very low level of vaccination. Whereas in contrast, in those areas with a higher level of vaccination, we're seeing less of an uptick. But among unvaccinated people, that's a significant risk. And that's the reason why we are practically pleading with people to please, if you're not vaccinated yet, seriously consider getting vaccinated.
That was NIAID Director Anthony Fauci raising the alarm for the American public to get vaccinated. Joining us now is Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. So, Sam, they want people to get vaccinated, but even if you are vaccinated, are you really protected against the Delta variant?
Yeah, I see. So the critical thing to think about here is what do we mean by protection? First of all, no vaccine has ever purported to be 100% effective against anything apart from very severe infections or hospitalizations, when we saw that back in the early days of the vaccine data coming out. What we have now is a potentially higher risk of infection with the Delta variant, but a similar level of protection against hospitalizations irrespective of what variant you're looking at. So that's the data that we have to think about. Do we care about mild infections as much as we care about hospitalizations?
So, and Sam, do we care about, I mean, we care about transmission. So if you're double vaccinated, can you transmit it?
Yes, you can. Of course you can, especially with the Delta variant. To start off with, the Delta variant in an unvaccinated person has about 1,000 times more, in a recent study that was published, virus in your respiratory tract than the ancestral variant. So it might be not that much more than the alpha that it took over from in the UK, for instance, and many other countries, but it's certainly higher. That means every breath that I breathe out, irrespective of whether I'm vaccinated or not, if I'm infected, will have higher virus number of copies in it than if I had been infected with a previous version.
But Sam, I mean, what we learned from the U.S. yesterday was that if you're double vaccinated, it protects you at the margin. But here in the U.K., because this variant is so prevalent, you still have to, be socially distant. So, what is the U.K. or what is the, in England now we have Freedom Day, everything's reopened. What's the situation going to look like in 2 months from now?
Oh gosh, if the government is lucky and all the modeling works out as they have hoped, the expectation is that there will be a peak in cases in the next 2 to 4 weeks. And I think we heard that from the Prime Minister yesterday. A site or an analysis that I follow called the Zoe COVID symptom study does seem to now show that there is a turning of the curve. But frankly, that is not reflecting the football finals yet. It's not reflecting the full reopening. So the expectation is this is going to go to 100 to 200,000 cases a day before it peaks.
How bad is it if you're fully vaccinated, Sam? What's the, case fatality rate or how sick are people getting?
Yeah, so the effectiveness of the vaccines against hospitalization or severe disease, Matt, is not much different between the Delta and the Alpha variant. The problem, of course, is that you're going to end up having more people infected, even if they're vaccinated. So you'll have a higher number of people who were double vaccinated who will end up in hospital. And but in general, you're still at the 80-90% level for the Delta variant.
Sam, thank you so much. Sam Fazeli there from Bloomberg Intelligence. Now, coming up, a sneak peek at tonight's conversation with JP Morgan's Mary Callahan Erdoes on Bloomberg Wealth with David Rubenstein. And we'll talk to her about markets. That's coming up next. And this is Bloomberg.
up to Maine and had a lobster. And it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
As you say, the markets are very healthy right now, given the liquidity that has been infused all across. I mean, we had a recession that was 5 times greater than the average recession in 25% of the time, right? It happened so fast. And yet our response to it was to add deficits to the United States government that were greater than the last 5 recessions and the deficits that came about. So we've had policy responses that are unprecedented here. And now we're seeing that play out in the marketplace. And so when you have things like Dogecoin, which were created as a joke and are now, you know, $30–40 billion worth of value, you have to ask yourself, is it the liquidity that is sloshing around the system that's causing this, or are these real new things that are happening in life? And only time will tell the answer to all of those questions. But it goes back to one of the most important things that you pointed out, which is diversification. There's just no way to be able to know everything that's going to happen in the future in every single asset class. And so the most important answer is proper diversification of these portfolios.
If somebody comes to you and says, I want to invest in cryptocurrency, I'm willing to lose the money, but I just really love cryptocurrency, do you say you shouldn't do it, or do you facilitate it, or are you still evolving your position?
So blockchain technology, which is the underlying piece of all this, it is very real and is changing all of the ways that we digitally interact with the different financial markets. Digital currencies are new. And in general, digital currencies are being debated as to whether they're an asset class or not. And a lot of our clients say, that's an asset class and I want to invest. And our job is to help them to put their money where they want to invest. So it's just it's a very personal thing. We don't have Bitcoin as an asset class per se, and time will tell whether it has the store of value, but the volatility that you see in it today, it just has to play itself out over time.
Now for more lessons in wealth management from Mary Callahan-Erdoes, watch Bloomberg Wealth with David Rubenstein tonight, 9 p.m. New York time. Now you can also learn a thing or two by listening to Tom Keene, who's on shortly, co-anchor of Bloomberg Surveillance. Tom, what are you looking at actually? What's your chart of the day? Equities.
Well, we're looking at the markets here, and it dovetails in, of course, as what we'll do with the space coverage starting about 8:30 this morning. And as they get ready down in Texas, Emily Chang is down there on the shores of the Rio Grande to keep it narrow in West Texas. But we're looking at the markets and the recovery today, and I wanted to put in perspective, Francine, where we are in terms of correction. This chart is way too complicated. All you need to know is yellow is a correction, red is a bear market off the Dow Jones Industrial Average, and we're nowhere near that, down 3%.
So are we back at the everything rally?
Well, I don't know. Time will tell. But the answer is we've certainly lifted off here. I watched the VIX, the volatility index of the Standard & Poor's 500. John Farrell lectures me that it's a better index than the Dow. Certainly in times like this it is, Francine. And we went out to 25 worst case, and we've come in better to a 21.85 right now. So let's say it's a third of the way back from agony.
We're at negative 111 basis points, negative 110 basis points on real yields, Tom. Pretty close to what, an all-time low. What does that mean about the economy? What are you hearing?
It means two moving parts here. Obviously, the growth scare, Matt Miller, yesterday was a huge deal. But what I would suggest is it's about the movable nominal yield and also movable inflation. And the number one issue right now is the nominal yield, the actual 10-year yield, 1.17%. Can you imagine a 0.99%? And Matt Miller, to Germany, I would note today the German yields roll over and continue to roll over.
Yeah, I thought that was interesting because we see a bounce in U.S. yields, and I think we're looking at negative 41, negative 42 basis points on bonds.
Yeah, I mean, absolutely. And it's a dynamic. Francine, I got to be polite to Miller visiting in New York. We may go out for a beverage of my choice tonight. I'm going to ask Matt if we should pay in Bitcoin.
Well, we would be able to drink less.
Well, if you find a bar that accepts it.
Yeah, well, somehow I think Matt Miller can find a bar in New York City that accepts Bitcoin.
I think we'll go someplace where we don't have to pay. You know, just put it on the account.
Possible.
I'm looking forward to hearing about this more tomorrow morning. Tom Keene there, Chronicle Bloomberg Surveillance there. Now, I look at what else we're watching today. Matt, space race.
Yeah, I mean, I think it's really cool that we're seeing now kind of a third leg of the business, if you will, right? Because we've seen Elon Musk now for years towing cargo and passengers out for industrial or research purposes. Then we saw Branson with his first flight. Clearly, that's going to be more of a tourist business. And now we're seeing Bezos. This is really just the beginning of what Blue Origin wants to do. And, you know, the sky's the limit, or the sky's no longer the limit, I guess. He could be looking to mine resources out in space. He could be looking to do some heavy industry out in space, basically trying to save the planet by moving a lot of the infrastructure off of Earth. So I think it's just really cool to see one more piece of the space race.
Yeah, and I'm looking forward to, of course, our special coverage, which starts at 8:30 a.m. New York time. Matt, I'm also looking at Netflix. So we talked about it last week, because I think it was last Wednesday, where we had this great Bloomberg scoop saying that actually Netflix was going into games. And in the last 7 days, I have to say Netflix foray into gaming is raising a lot of questions, a lot of eyebrows amongst analysts, because they say that they don't have a game catalog, that Netflix so far hasn't cultivated a base of gamers in their audience. And we spoke, for example, to Lewis Ward of IDC, saying they also don't have an internal studio or infrastructure to handle a service. So it'll be interesting whether they talk about that today when they release earnings. It'll be interesting also to see what, you know, the rest of the business and the streaming is going. So it's also Big Markets Day, Matt. So of course, Tom, John, and Kaylee will look at treasuries.
Yeah, well, earnings continue to impress, and maybe that will be the narrative for the day with Netflix. I wonder how much Drive to Survive is a contributor, especially after Lewis Hamilton almost killed Max Verstappen over the weekend.
Yeah, Bloomberg Surveillance. I don't know if they'll talk about Lewis Hamilton, but they might. Bloomberg Surveillance up ahead. Kay Lines, Tom Farrow, and Jonathan Farrow and Tom Keene. This is Bloomberg.
Happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we are trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Here, right now, in the very short term, we're in that frustrating pain trade.
It's difficult to quench that thirst for yield given the very low level of treasury yields.
As long as inflation remains contained overseas, you're going to see that global bond yields are going to remain low.
No one's really defined what transitory is, least of all the Fed. It could last for a while longer, then it could start to impinge on consumer confidence.
The idea, of course, is to get the unemployment rate back down to where it was before the next hit comes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
117 on 10s from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene. I'm Jonathan Ferro. Together this morning with Katie Lyons. Lisa back with us next Monday. Tom, this bounce this morning is unconvincing. Your equity market up 1/3 on the S&P. There's still a bit in this bond market. Yields are coming in a couple of basis points. 117 on 10s.
I'm going to focus on the bond market. John, the equity market gives us joy. The VIX comes in from a 25 level in the sweat yesterday, negative 900 Dow points. We come into 21.89. Great. You're dead on. The 10-year yield, it continues ever lower this morning. That's a huge deal.
Where does it leave the Fed next week, Tom?
It leaves them, to be honest, I haven't thought much about it, John. I'm just looking at the market tick by tick. But to your point, I think it leaves them ever more dovish, and the ECB is the same way. Frankly, the market's doing for Jerome Powell all the heavy lifting.
ECB this coming Thursday, news conference decision, coverage full right here on TV and radio here at Bloomberg. And Tom, the other issue we've got to talk about is the Delta variant and what it means for corporations and the decisions they'll make in the coming months. I thought it was really interesting to see our reporting on Apple. Apple delaying the return to office by a month, reportedly, Tom. And I think that's significant. How do corporations respond? How do policymakers react?
Yeah.
And what's the reaction going to be of consumers as well through the summer?
And I'm going to go to combine it with corporations and education as well. I don't know if they're going to wear masks on Blue Origin today, but I thought the federal judge decision on Indiana University, John, that should have been at the top of every newspaper nationwide. This is a federal judge that told Indiana's undergraduates and graduates, get vaccinated or don't show up. To me, that was the Delta variant story yesterday.
You mentioned the space. Should we talk about it?
Oh, please.
Should we do it? Should we promote it?
Yeah,
Should we do that now?
It's a huge deal. Let's promote
Full
it right now.
coverage, 8:30 Eastern on TV, radio, quick take. Pretty much every single meeting we've got here at Bloomberg, Tom, will be doing this. What are you looking forward to, Tom, as we get Mr. Bezos alongside his brother, an 82-year-old, and a teenager go into space.
John, I'm going to channel the great novelist James Michener, who wrote the book Space because he was so angry in the early 70s how everybody thought this was a lark. This is not a lark. Anytime you put anybody on top of liquid oxygen and liquid hydrogen, bad things can happen. What's needed here today is a safe return of these 4 individuals to Texas soil.
You and I caught up this morning. I didn't get the sense of the happy talk that I've heard elsewhere, Tom, from you. You're taking this a lot more seriously than some others are, at least.
Yeah, well, I think that people do. I mean, I can bore everybody with a history of this and blah, blah, blah. But what's needed here is to understand is this is physics, it is science, and there's some real danger involved here. Alan Shepard and Gus Grissom knew that before John Glenn orbited, and Mr. Bezos, mentioned Yuri Gagarin the other day. These are all people with risk involved. There is risk starting at 8:30 with our coverage this morning.
Kaylee, the teenager gets all the attention at the moment alongside Jeff Bezos and his brother. Can we talk about 82-year-old Wally Funk? I think that is the most awesome story out of everyone heading up there a little bit later this morning.
I do too. I'm not sure if I would be willing to go to space at 82 years old, but for her it has been a very, very long time coming, John. We're talking since the 1960s, and when Blue Origin made this announcement that she would be going, I was filled with a pretty immense sense of pride for her, and it is very exciting that she will get to go. But the age differential between Wally Funk and Oliver Damon, John, 18 years old, and you're already going up into space. I'm not sure how your life can get any better out of that throughout your adult years.
The
I feel like
youngest ever, the oldest ever. A few stories out there in the mix, some subplots for you a little bit later this morning. As I say, full coverage on TV, radio, and on Bloomberg Quick Take as well. Let's check in on the price action right now. Equities do bounce, but it's the smallest of bounces on the S&P 500, up by around about 1/3 of 1% to 42.64, and the Nasdaq up by 0.35%. And maybe that's what's been original recently about this sell-off. The Nasdaq did not sit it out. The Nasdaq participated in the downward move. Outside of that, yield still heading lower. We're down another 2 basis points to 116.56, and euro dollar stable going into the ECB on Thursday. Katie, euro dollar 117.96.
Indeed, John, and I wonder how much the economic data is really going to matter to this market today, given all the growth and Delta variant concerns that are out there. We do get some of it at 8:30 a.m. Eastern time. Housing starts and building permits for June. We did see home builder confidence yesterday falling to the lowest in about 11 months because of some of those rising material costs. So we'll see if that starts to weigh on residential construction. But also at 8:30 a.m. Eastern time, of course, as you and Tom were just discussing, starts our special coverage of Jeff Bezos launching into space. That actual launch on a New Shepard spacecraft will happen at 9 a.m. Eastern time, the first manned mission for Blue Origin, and Jeff Bezos will be going up past the Kármán line. And if that wasn't exciting enough, also after the bell, we get Netflix second quarter results. It's all going to be about the subscribers, as it always seems to be. Likely subscriber growth is going to moderate in the second quarter as the world reopens, but it's really going to be about that forward view when Netflix reports after the closing bell, John.
Looking forward to that, and looking forward to the coverage from the team a little bit later this afternoon. Joining us now is Marvin Lowe, State Street Senior Global Macro Strategist. Marvin, what a 24 hours, what a couple of months we've had in this market. And we've got to start with where the 10-year is. A 116 handle on 10s, Marvin. What does 116 say to you?
You know what? It's not only the 116. It's the fact that while we're certainly retracing a lot of this year's upward yield and rise, we have to put into perspective that real yields, the TIPS yield, is actually pretty much at the lowest that it's ever been. So in combination, that tells me that we not only have growth fears, but we have questions about what the world looks like once we get through this. And we have to remember that before the pandemic, it wasn't as if the economy was in an incredibly solid place.
Marvin, what is going to be the reaction of the last 2-3 days within what I call the trust money market, the very short-term paper, the wall of liquidities out there? Clearly this morning, there's a safe haven feel to the 10-year yield. What are going to be the dynamics in the reverse repo market and even out to 6 months?
Yeah, absolutely. So the reverse repo market, once the rates were raised to 5 basis points during the last Fed meeting, saw a wall of money come into it. That's going to continue because that's a higher yield than ultimately you could find elsewhere. And while we kind of worry about the Fed pulling back, they're not pulling back yet. There's still 120 billion that's being purchased. There's other cash that comes in because of the debt ceiling. So there's a lot of liquidity out there, which ultimately is somewhat supportive of the market, but it's finding its way into the Fed. And when it finds its way into the Fed, to the reverse repo facility, it's not made available elsewhere.
And John, this is so important because then I'll go back to Keynes. When the facts change, I change. How is Jerome Powell going to change given this 10-year safe haven move to 1.1705?
Yeah, Tom, I would go even further. Marvin, I'm trying to work out what on earth this bond market is trading on. So many people come out and say, look, these moves, these prices aren't validated by the data. They've been saying that for months, and yields have just carried on grinding lower. So at some point, you have to sit here, respect and appreciate what a market is trading on. And I'm trying to work out, Marvin, what it is trading on.
Yeah, absolutely. So I've been in the camp that ultimately not. I'm not surprised by where yields ultimately are right now. I think what it's saying is that number one, the reopening process is not going to be as robust and enthusiastic as people thought, several months ago. We've priced in peak growth, so we really need to think about if we've been too aggressive around that. And ultimately, whether or not the neutral rate, if you will, the Fed's long-term dot is appropriate in a world where if it looks like pre-pandemic, will look like pre-pandemic with a lot more savings and a lot more government debt, both of them somewhat restrictive of yields being able to move higher.
Marvin, I want to pick up on that bump in the reopening that you were talking about. What's the read-through then to the equity market? Do you see a revival for some of that reopening kind of cyclical reflationary trade in the equity market happening anytime soon, or is it dead in the water for now?
Yeah, you know what? To me, there's still a lot of wood to chop in terms of deciding and understanding what this reopening looks like. If we kind of think about what the main catalyst for a lot of the excitement was, it was the Georgia elections. It was the fact that fiscal was going to walk hand in hand with monetary. That is certainly in question. We'll get a lot more detail this week, but the fiscal response is probably weaker than we had thought kind of back in January and February, if you will. That leaves monetary alone, and we've seen that before. So we've seen, yesterday NASDAQ wasn't as, certainly participated in the downside the way the rest of the equity indices did, but it still outperformed, and it has been outperforming now for the last 6 weeks or so. So there is a rotation kind of back to that safe defensive